Okay, so I gotta go pee. What's this thing already bounced? I'm not gonna trade. I'm gonna go eat lunch, get my lunch ready. Thank you, Mike. Thank you very much. I'll let you have my sister for a night. I'm definitely happy for that, because I would have never figured that out. Do, 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 do. Jimmy called the double bottom.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick.
Yeah, much better.
Earnings coverage, insights from the smartest minds on Wall Street.
I mean, you football around here,
Friday, 3 p.m.
3 or 4 seconds can mean the world to you.
Anytime, anywhere, on any device.
You know what I'm saying? 3 or 4, 5 seconds. I mean, you're fibbling around and you're getting frustrated. And
welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange. We have a few stocks to watch. First, the developing stories, and we bring in Alex Coffey, senior equities contributor here on Schwab Network. We're watching CVS, one of the brokerage houses, saying there's 35% upside. Tell us about the upgrade, the call here.
Yeah, Charles Rhee over at TD Cowen with some pretty glowing words around what he's seeing in CVS. You mentioned the nice performance today as the stock hangs out just under 65 a share, about a 3% upside. The struggles have been, well reported on over the last few years in this space. It's not just CVS that's struggled, Walgreens as well. But trying to, get some good mojo going, not only today, but over the last month. The CVS is up about 12% over the last month. TD Cowen upgraded the stock to buy from hold. Price target, as you mentioned, is significantly higher, up to 85 now from 59. They talk about the release of a 2025 Medicaid Advantage plan benefits, and they show that CVS saw meaningful reductions in over-the-counter benefits and dental allowances, as well as an apparent increase in 4-star plus enrollment for 2025. Charles tells his investors in a research note that he thinks this is going to provide, and it does provide to him greater confidence in the company seeing double-digit earnings growth for 2025. So some optimism perhaps in the future for this space, particularly for CVS. That's the reason for the upgrade and the price target hike. Analysts as a whole split evenly between buys and holds in the 12-month consensus price target around 67. So it's approaching that very, very quickly at its current share price. We'll see if there's more adjustments like this coming soon.
All right, thank you for that, Alex Coffey. Good to see you. And we're seeing that up 3.2% right now. Then we turn our attention over to the disruptors, and George Sillis is here for that, senior markets correspondent, taking a look at DoorDash. And we have Wells Fargo boosting the price target there. Tell us a little bit about that story.
Yeah, Nicole, I mean, if you look at DoorDash, this company is performing exceptionally well over the last year. It's up over 80%. And what's happening is essentially DoorDash, along with Uber Eats and Instacart, are really creating an oligopoly. In other words, three major suppliers of food delivery, parcels now, and even delivery of home goods. And so this is what DoorDash has been doing. They've been expanding their offerings. Gross volume orders have been increasing over 30%, total top line sales also over 30%. And Wells Fargo sees the company's prospects more constructive, particularly domestic markets going into Q4. They did increase their price target to 142 from 127. They maintain equal weight rating on the name. And the reason being is that DoorDash is starting to expand pretty aggressively internationally. They bought a UK competitor called Deliveroo. This was over the last year. But Wells Fargo does see some challenges in other Nordic areas of the European Union based on competition. So they're constructively bullish on this name, and I think they're onto something, because if you look at the revenue growth for DoorDash, last year was around 25% over the last 4 quarters. They're estimated to grow about 23%, but earnings growth is expected to be around 42%, and right now it's trading around 47 times next year's earnings. So one would say maybe that it's trading essentially a little bit higher than next year's earnings growth, and so therefore they seem to be more balanced relative to where the stock price is right now from a valuation standpoint.
All right, thank you for that. So with that, how would you go about an example trade here today on DoorDash?
Yeah, I mean, if you look at the weekly chart, the stock is performing exceptionally well. It's in a steady, slow uptrend. So based on the estimates and the guidance, and also the scalability of the company, because they're partnering up with other home goods suppliers like Lowe's, are also starting to generate
I'll be right back.
advertising. My point is, I think the scale of the business is going to improve and earnings will improve. So therefore, I think the trend will continue, but slowly. And so with that said, I'm going to structure a long call diagonal spread. So in essence, what I'm going to do is I'm going to sell the out of the money 155 November call option. These are monthly options, by the way. And then I'm going to use the proceeds for that, and I'm going to buy a December in the money 135 call option. So altogether, this spread is bought for about $12 a share, $1,200 a contract. So in essence, we're using the November proceeds, the out of the money option, to help finance the December option. It helps eliminate some of the theta decay or time decay in this position. Your break even, if you do hold it to December, is essentially $147, but the sweet spot of this position is 155 by the November contract in 42 days. So in essence, it's bullish, but you're capped to 155 if the stock hits that or higher by expiration of November. But if that November option expires worthless, then this position is unencumbered with an unlimited profit potential.
Okay, thank you for that. A great explanation. George Sillis every day on our disruptors, looking at DoorDash today. Thank you, George Sillis. Coming up next, our 316 round. We're diving into the defense sector. We'll find out which stocks in this space are interesting to take a look at, what lies ahead for this group. Of course, you have Middle East tensions could be driving things even more so. Trading 360, we'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan! How's my favorite client?
Great! I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward,
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. Our panel's ready. Nicholas Owen, Industrials Equity Analyst at Morningstar Research Services, and Brian Glenn, Chief Investment Officer, Premier Path Wealth Partners. Thank you so much. We are talking about this defense sector. Nicholas, where do we stand on this group? Are all the stocks and companies positioned well? I mean, you have geopolitical tensions, or not necessarily so?
Thanks for having me, Nicole. My view is they're positioned relatively well in terms of being able to supply, U.S. and foreign governments with the stuff that they need. I would not see there being a kind of incremental trade or opportunity in these stocks, which in my view are fully valued today, if not verging on overvalue in a few cases, where escalation of the conflict in the Middle East doesn't change the fact that with Ukraine and Taiwan, geopolitical risk, I would say the story is already out there, and incremental demand from, say, European governments,
Okay.
or replenishing stocks of artillery, those stories are already out there. That's my view.
Brian, what are your thoughts?
I think they're roughly consistent. I think it's well known that U.S. stockpiles are depleted over the last few years, and this is before sending weaponry to Ukraine. A bigger trend that we're paying attention to at Premier Path Wealth Partners is the cost of defense. So it's about half of discretionary spending for the U.S. government right now. And if you look at the trend, you have an F-35 that's $100 million per jet. We're all familiar with the Predator and Reaper drones that are about 20 to 30 million. And a company we like, which is Kratos Security and Defense Solutions, is making an AI-piloted aerial jet called Valkyrie that's using software made by Shield AI, which was founded by Ryan Sang. It's a private company. He's actually a business school classmate of mine. And that's $2 million per unit. That would be a wingman to a piloted F-35. So it's a much lower cost for the U.S. government. And if you look at the Houthi attacks over the summer, we responded to $2,000 drones with $2 million missiles. And how long is that sustainable? So we think that it's not gold that backs the U.S. dollar, but it is the most powerful military on the planet. And we think that will stay a priority, but cost has to be an issue there.
So what's the ticker symbol? What's the company you just mentioned? It's not one that we talk about every day.
It's a smaller company. It's called Kratos Security and Defense Solutions. It's based out of Southern California. It's about a $3.5 billion market cap. Doesn't have much debt at all, and slightly profitable, but we think it has a big future ahead. If you look at the Air Force's Skyborg program, which is pouring about $500 million into AI-piloted jets, these guys probably have the best product out there.
Yeah, KTOS, the ticker symbol here. You noted that in your notes, so thank you for that. And so, Nicholas, what names are you watching closely? You do have a 4-star
The
rating
VIX.
on Lockheed Martin, right? You like that one?
Actually, that one's appreciated quite a bit in the last while. So it's in our current rating, it's 2 stars. So Lockheed Martin is, they had some production disruption on the F-35. I think people were worried that timeline would slip, but I think they managed through it. And so I think the folks are back on board with Lockheed. Again, though, like in terms of, is there some connection between recent headlines and these stocks? I don't see that. The trend towards unmanned and sort of joining autonomous vehicles with piloted vehicles is a really interesting one, and a lot of the firms that I cover, the bigger top 5 type contractors, are active in those areas as well.
So what names in those areas do you like best?
Well, I mean, I like, the Northrops and General Dynamics. To me, those are sort of tried and true and very disciplined operators. They're a little smaller than, say, a Lockheed. But again, today they're fairly valued, so I'm not going to pound the table on them today.
I see. So Lockheed has run up, to your point, right, year to date is up 32%. In 6 months, it's up the 32%. So has certainly had a nice run up. It hit 611. And you said both General Dynamics and Northrop Grumman are fairly valued. I start to think about how this group expands, AI, we have electric vertical takeoff, we have, government funding. Do you have more or less military budget? Those types of things will really factor in. Brian, are you watching how much, which administration may give more or less to this group? Any thoughts there on the big picture or anything else to add in?
I don't think we have a strong opinion that way. We think it's something that's needed. We think the Department of Defense is very aware over where they need to get to over the next 5 to 10 years. And, we actually, I'd say, also pay quite a bit of attention to legacy defense, legacy commercial aerospace, and there's some exciting spots there as well.
And, how about space? When we think about how aerospace and defense sort of converges with space, satellites, how that may help or hurt this group too. Nicholas, any final thoughts?
Well, I think the story there is pretty interesting. The big headline grabber, obviously, is SpaceX, which has essentially disrupted the launch market. I bring that cost way down. The names I cover specifically more on the defense side, their biggest
With Always Clean.
space are these mostly
This is my new phone number.
Imaging satellites and so forth.
Was getting
They
too
might
much
pool
spam.
them, for the Defense Department at a time. And that's not something that Elon Musk has disrupted, right? So you have launch and you have these little dorm fridge-sized satellites for internet. So I think of there as being kind of two markets there, and the legacy manufacturers are still fairly entrenched in those high-end items. There is some interesting stuff going on with propulsion, rocket motors, like between Northrop and now Lockheed, talking about becoming a third provider of solid rocket fuel. Again, these are sort of activities that are taking place within the larger enterprises, and they're always trying to position themselves and reshape their portfolios to be where the Defense Department wants them to be.
Yeah, and we're also watching Boeing, of course, which hit a new low of 149.49 on the 1st of October. That's always in focus. Year to date, down 42%. Nicholas Owens at Morningstar Research Services and Brian Glenn, Premier Pathwell Partners. Thank you both so much for being with us here on Trading 360. That's going to do it for us. The Schwab Network app, download that. That's in the Apple App Store. It's free. Tune in 24/7, schwabnetwork.com. I'm Nicole Petalides. I'll see you at 2 o'clock for the watch list. Please join me then. Meantime, keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with
Hello.
risk. No agenda, no hysteria.
I'll just give you my new number.
Analysis of what policy means for your portfolio.
Stay informed.
Yay. How are you
Stay
feeling?
ahead. Tune in to our election coverage on Schwab Network.
What's that? Oh, very good.
It's a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set.
What'd you buy Goldman Sachs
incredibly
for?
competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
No, it didn't. It popped this morning.
It's great, but it's not a formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous
I don't know.
amounts of data.
You certainly see patterns.
Context is
We're going good.
important. I think the best traders I've seen have insatiable intellectual curiosity.
Yep.
Otherwise,
I'll call you tonight. Will you be up?
Become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional.
They got a buy rating on it right now.
As if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost.
Oh shit! You need to get out
Do you
then.
think that this is potentially a human superpower?
Yep. Make sure you get out of it, so you won't lose any more money. Give it a couple hours.
Welcome to Market Overtime.
Right now you're at the 200, so it should bounce back up to
pretty much across
491.
all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away, off with their heads.
AI feels controversial and it's going crazy right now.
Yeah, 491. See, make sure it gets back, maybe breaks that, 491.
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
What the fuck?
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great show for you too today. We're going to have discussions on the markets, jobs data. We're going to have some option strategies. We're going to look at big tech, meta platforms, another all-time high today, and also AMD, which has been consolidating after falling sharply from those all-time highs that we saw last March. And like Folio, we'll break down consumer sentiment data in Amazon, the e-commerce and cloud stocks, attempting to snap a 7-session losing streak today. Now let's take a look at the major averages, which are off of those session highs that we saw post the jobs report. S&P 500 up 0.4%, the Dow up just over 130 points, or 0.3%. The Nasdaq 100 up 0.75%. And leading to the upside, despite that rising yields, the Russell 2000 small caps up over 1.1%. Help me break down this market action and give us a breakdown of the jobs report. My co-host, that's Kevin Hinks. Kevin, blowout numbers. I don't think anybody had these estimates above 250,000 for jobs added. And then they actually added 72,000 more from the weaker than expected July and August reports.
So what's more surprising? The number that came out, the revisions, the entirety of the package of the economic data, or the muted response post-open? That's just as surprising to me.
Yeah.
NVIDIA was down almost $1 at one point today.
Right.
Based on the news that NVIDIA put out, this is not the NVIDIA show, but it's certainly, there's some head-scratching lack of momentum on the upside based on this number. So is it because yields have spiked? Is it because the dollar and crude oil have all spiked? That might be it. There might be a macro kind of a roof on its ability to be strong, but good Lord, that was a strong number. And it was, and it's 4.1 will be the official reading, but it was 4.051, which is 2 ticks from being 4.
Yeah.
I mean, the question really now is, what does Jerome Powell do about this? And what do the Fed speakers next week say? Because if we're looking at unemployment and not inflation, because the wage data pretty strong.
4.0%.
A little too strong.
Yeah,
so
year over year.
What does that do to Jerome Powell's rhetoric about inflation? Okay, you look at the labor market. You just had a complete flip, a little tone change.
Right. And those upcoming jobs reports are probably going to be clouded by the hurricane.
Yeah, my name's Jim Howard, James Howard.
Coming out in
I
the
got a
next
new phone
couple
number.
weeks is going to probably be unmeasurable
I haven't
by some of the data.
Yeah, it was stronger than expected. But this kind of, kind of expands the jobs data that we got this week. ADP was better than expected. JOLTS was higher
February,
than expected.
Excuse me a second.
So
jobs claims firm.
Question is, why'd they go 50 basis points if they're worried about jobs? And then was look at this.
Well, I'll tell you what, we can know for sure. He doesn't see the number ahead of time.
Yeah,
that ruled out that whole scenario.
Yeah, that's true. If he would have seen this number, maybe they would have only done that 25 base point maintenance cut. But let's expand on this conversation, bring in our next guest. It's going to be Joe Mazzola. He's joining us from Charles Schwab. Derivatives, a strategist here. Joe, when you look at this data, better than expected, blowout number, the upside, unemployment rate comes down. Hey, all the other jobs reports this week were pretty solid too. You know, what's Fed Chair Powell and these Fed members worried about?
I don't know. I mean, this was a blowout number, as you mentioned. I think what was also important, what Kevin mentioned, the idea that there was some revisions to last month's, where there was definitely some consternation around that number. A couple takeaways. I mean, when you look at kind of where we saw gains, they were across the board. I think the only sector that seems still sluggish is manufacturing. And look, that's not a new story. We've been talking about the ISM and PMI numbers and contraction where it's at. So, we still need to see some, some expansion within that sector. But everything else was really solid. You saw the yields, pop on that, as you guys mentioned, and you also saw the probability of a 50 basis point rate cut basically go to zero for the next meeting. I think it's maybe sub 10 or something right now. Last time I looked. So all that kind of sets up for what do we have to look forward to over the next couple of weeks? I mean, that's earnings. I mean, that's really what we should be paying attention to. I heard you guys talk about, and Kevin mentioned this idea. Well, why aren't we moving higher? I still think there's some concern around kind of the macro environment. I mean, if you look at the VIX, my estimation is you get a blowout number like that when I think a lot of people were hedging into that number. I think the idea was that maybe it was that number that people were hedging. We saw a lot of VIX call spreads trading this week, upwards of like 200,000 within the last couple days. And they were short term, so they were October 16th expirations. These were not hedges that were looking forward to the election. These expired before those. So they were really driven by some type of event. My initial thought was that they were driven by the non-farm payroll, but it could be these call buyers could have been looking to maybe protect against some tensions in the Middle East. And I think that's probably why you're seeing this reaction a little bit muted. And I think that's probably why you're seeing volatility still elevated, because people don't really want to add much going into this weekend should more tensions and more bombings and missile strikes occur.
Yeah, Israel not going to back down, and they said they're going to retaliate. But Joe, you mentioned expectations of a Fed rate cut in November. It's about 96% that we're going to get that quarter basis point cut that Fed Chair Powell's kind of laid out for us. But it's flipped, where the 50 basis point isn't even on there anymore. There's a 4% chance of no rate cut in November now, based on
look at that bounce. Dadgummit, Jimmy. I'd be betting real good. I'd be betting 1,000 today if I'd have took that trade.
Watch that percentage. That's something worth monitoring over the next week or so, because next week we get CPI, PPI. Right. If there's any firming up there, that number could whittle away as well. And boy, I just think next week, the Fed speakers, you already saw Austin Goolsbee was on Bloomberg today trying to do it.
Uber job.
Yeah, he wasn't exactly clear. He didn't make a great case for either one. But, boy, the Fed speakers are going to have to answer for this number and their thoughts about inflation, and then what happened here. It's going to be fascinating.
Yeah, Goolsbee came out and said that inflation might undershoot their 2% target.
Yeah.
And then he said the neutral rate might be higher based on the data. He said superb jobs report. Joe, I mean, the takeaway, he's the Uber dub, right? Chicago, not surprising, getting an Uber dub view here out of him. But, when you look at this, data that we've had the economy doing well, GDP around that 3% level at this point, wages going up, unemployment rate down to between 4 and 4.1%. I mean, hey, this sounds like a soft landing narrative to me, even if they don't cut a 25 basis point in November.
It does right now, but the Fed is very data dependent, and they'll get, as Kevin mentioned, they'll get some of that inflation data next week and see what that looks like. It was interesting that Gouldsby did make the call that inflation might hit under target. I guess we'll see. I mean, there was a little bit of wage inflation in this data. I don't know if you guys have talked about that yet, but it was at 24% month over month and around 4% year over year. So that it's contained, but it was higher than expected. We'll see kind of what happens to the jobs report as you guys mentioned, as we kind of see what happens from the flooding and how that affects it going forward. But I mean, look, what could have been a really dicey end of the week between the non-farm payrolls, between the labor strikes, which ended last night. So thank goodness for that. And then of course what we talked about over the weekend, there could be some more geopolitical tensions that arise. What really could have been a big stinker for the market today really just kind of set up for a nice little Goldilocks trade. And even though I realize we're not at the same levels that we were on the open, we still kind of vacillated above unchanged, right? We didn't have a negative print. We got pretty darn close. But the buyers did step in a little bit. When I think in terms of kind of breadth, what I've seen this week, look, the S&P 500, you still got 50% of its, 75% of its components above the 50-day moving average. You've got a weekly advanced decline of 3 to 1 on the positive side. So I mean, there's still good momentum for this market to address underneath the surface. You're not seeing it as much in the Nasdaq and the Russell. That's been the story all year, and the Russell's actually outperforming the other two indexes today. And then at the sector level, in the same thing in terms of the breadth, 7 of the 11 sectors now have 80% of their components above the 50-day moving average. It's the breadth is widening. There seems to be more and more buying below the surface. And this is extended beyond the utilities and real estate sectors that we've been talking about the last couple of weeks. Now we're in materials, industrial, financials, discretionary. So this is a cyclical trade that's building some momentum.
Yeah, we got all the airlines up on the Spirit Airlines potentially filing for bankruptcy. That's providing a lift, even though crude oil caps back above $74.50 a barrel. Yeah. So there's some inflationary pressures. That's what's against the airlines. Right. We've got oil up 10% so far this week alone. Guess what? That's going to show up. But now flip-flop this to yield. I get it. Yields go higher. The economy's doing well. Yeah. Stocks can go higher in that type. But then you look at the move of the dollar this week. I mean, that's, everybody was cheering when the dollar was coming down, but it's not really providing any headwinds for equities at this point when it moves higher.
And it's finally, gold is reacting to the higher dollar. Finally, the gold has, held up there pretty firm, even with the dollar that's moved up this week. I've said this before in the air, it's more of a theory than a fact, but it just feels to me like the dollar is becoming a risk-off asset, right? A place where people go in uncertain times, they buy the U.S. dollar. The correlation is getting higher and higher. That should work against gold, but it doesn't always.
Yeah, but gold it's almost like the central banks are kind of ignoring the dollar at this point. They're pushing into it. Now retail segment's starting to get into gold a little bit. Like, hey, maybe it's a safety place. Inflation's coming down. You get those inflation numbers next week. But then you also have to look at the dollar, Joe, from this regard that, hey, if we kind of stop or maybe we're only doing maintenance cuts and the rest of the world continues their cutting cycles and maybe it's a little bit more aggressive, is that why the dollar's higher and stocks aren't really looking at this as a negative?
Yeah, no, I mean, I think that's a valid point, Tom. You were talking about the dollar being almost a safe haven. I mean, I still think hold it. I still think that's why, even though you're not seeing the reaction to the higher dollar in gold over the course of the last couple of weeks, yeah, we've seen a little bit today, but I think that's one of the reasons we're continuing to see gold expand is because central banks are buying up gold, and now, as you mentioned, retail is getting into it as well, too. So We always talk about this idea that there's competing markets for dollars, right? And not U.S. dollars, but dollars in general. And you're starting to see some of that money rotate into the commodity sector. A lot of that had to do with the Chinese stimulus plan last week. And saw commodities really kind of pop on that. You think, well, pop on knitting tension. So, there are plenty of places for the dollar to go, and it's starting to kind of rotate out of maybe some of those shorter term treasury and money market funds that have been sitting there for a long time, and that's you're starting to see those yields pop as well.
Yep, leaning to the upside. I mean, you got Mag 7, except for Apple, all higher today too. Tesla rebounding a little bit. It's got going into next week. You mentioned the inflation data. Apple on CNS on Wednesday. But then, it's my favorite time of the year. It's earnings season. That has that robo-tax event on the 10th. Then AMD has their AI event on the 10th also, so there might be some movement there. But then earnings season, my favorite time is right.
And Delta on Thursday, banks on Friday and Tuesday, if you notice. It's JP Morgan and Wells Fargo on Friday, and then it's Bank of America, Citi, and Goldman Tuesday.
The Tuesday after.
Right. Yeah. It's the following Tuesday. So, we're going to get a good look at airlines. We're going to get a good look at banks like we always do. How are they going to deal with net interest income? Probably going to come down. We already know trading levels are down. Right. So, could be a bumpy front. I don't think the airlines are going to perform, but I think they're going to bust crushes. Banks maybe not.
Yeah, because those crude oil prices were hovering below $70 a barrel for a good majority of the quarter that they're going to report on. Delta between Tuesday also. All right, guys, let's take a quick break and come back. Get into discussion on big tech. We're going to lead off with Meta Platforms, which hit another all-time high, up over 60% so far this year. Stick around.
Trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging
Double
by.
bottom
No problem.
completed.
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market here on the Schwab Network. We're talking big tech today. We're going to lead off with Meta Platforms. As I mentioned, hitting all-time highs today. Everybody loves
Meta.
Their social media, I guess, and there's no pullback in any advertising spend. That's where they make most of their money. Let's bring in Diane King-Hall, Senior Markets Correspondent, to help us break this one down. Meta Platforms on a tear so far this year, hitting all-time highs. Diane, break it down for us.
Yeah, earlier today it did hit an all-time high during the session. It's pulled back a little bit. Shares are still higher for Meta, but again, not quite at that level that it touched earlier in the session. We've seen a pullback overall, along with the broader market, but shares up more than 60% this year. They're up more than 90% on a year-over-year basis. In terms of some of the catalysts on the horizon, you have their earnings coming up on October 30th, so that's one of the things we're going to look forward to. We had some recent bullish commentary from the analyst community around Meta. Analysts are largely bullish on Meta. You have more than 50 buy ratings on the stock. You have very little in the sell camp, just a couple of sell ratings on Meta. You had Wells Fargo out this week, who they boosted their price target on Meta. They've boosted
Wells
it to
Fargo.
52. They previously had a price target of $647 a share. They maintained their overweight rating on the stock. They're expecting to see just continued growth in their ad revenue. They're projecting a more than 20% year-over-year increase in that. And it seems to be, just as you mentioned coming into this, it's all about what their advertising looks like for the company. When I look across a variety of analyst notes and commentary on Meta, one of the things that's helped them
Now that I'm eating more steak, I need to get me a
Reels,
decent steak knife.
And you've seen them integrate more AI, so that helps them with turning up the heat when it comes to that revenue. Rosenblatt seeing around the same number in terms
So this
of
big old thing.
expectations for ad revenue. They're expecting it to increase more than 20%, and you have 1 million advertisers who use their Gen AI ad tools.
Meta's always had good advertising.
Agree that the year of efficiency worked. It was efficient, right? It was successful, and their earnings jumped to big numbers.
NVIDIA popped back up again. Jimmy called that bottom.
Their operating margins 29.9% to 38%. Here's the thing, though: last 5 years, their R&D spending has doubled. I think it's getting a better reception because they're spending on AI, not metaverse. I think that's a more popular place for them to spend their money. But their ad spending, 95% of their revenue just keeps getting stronger. They're going through a great cyclical wave in ad spending and just riding it. Don't screw it up by spending too much and ignoring all these other things. But boy, this stock, what a run it's been on.
Yeah, it has been. And I do think, to your point about what the spend is, there's grace that's being shown to Meta because, again, the spend is in the Gen AI space. And we know that grace has been shown to the companies that are the front runners in this space, like NVIDIA, like a Meta. I mean, obviously, NVIDIA, it's not just about the spend. Their performance has been excellent as well. But going back to Meta, some grace has been shown there. And the expectation is also that demand will be strong for the Realty Lab space for those new Ray-Ban Meta glasses. So we have the holiday season coming up. They've priced it, they had reduced the price some, so those are expected to sell well. And Meta, on their last earnings call, they had said that production demand looked so strong that they were more concerned about, kind of keeping up with the production to meet the demand that was there for those Ray-Ban Meta glasses. So those are expected to be a strong sell for the company through the holiday season. But we can't forget that they do have some headwinds, and that's in the regulatory space. We've seen that with Alphabet, with Meta. Even today, you had some regulatory pushback from the EU with restricting the use of personal data harvesting from Facebook. There was news in that space for the purpose of advertising, and they said that in the EU it goes against their privacy regulations. We know they have more stringent privacy regulations over there than over here, but the stock is managing to shake that off today.
Yeah, you've always got to throw in there that toll booth over in the EU that keeps on ringing up charges on these big tech companies here, based here. All right, great stuff. Thanks to Diane King Hall, Senior Markets Correspondent here joining us. Let's bring Joe back in here on this discussion. Joe, when I look at this stock, the RSI is 76. It's overbought on a technical level, but, some of the metrics that Kevin mentioned, as far as growth and advertising. Their margins are increasing. In valuation, compared to the other Mag 7, it's still one of the lowest, besides maybe Google Alphabet, as far as forward PE of around 27, 28 at this point. So it's not expensive by any stretch of the imagination, right?
No, I mean, look, you can have a forward PE at 28 with profit margins of 35%. And that's that's a formula for success. And the one thing that's a little bit high is maybe the PEG ratio is around 2, but it's not something that I would look at this and say that it's exceedingly high. Here's the thing that Meta's been able to do. Meta's been able, and specifically Mark Zuckerberg, and the way that he's kind of changed how he approaches is dealing with with the press and how he's announcing earnings, is they've been able to show their monetization of AI better than probably any other company out there besides, of course, NVIDIA. And what they've been able to say is, here's where AI has led to digital ad sales, and that's kind of their bread and butter. Whether or not you're talking about the Clark Kent glasses that are coming out, or all the other stuff that they've got. I mean, it really boils down to how do they use AI to generate those digital ad sales, and they've done a masterful job of doing so. That being said, that the stock is at an all-time high. And it is something that, look, it's not to say that it can't go any further, but what I'm looking at it in terms of this trade is yes, it is a bit of a bearish looking trade, but I'm looking at it for people that might be long the stock and they want some way to provide a little bit of a cheaper finance for some downside protection. So if you're long the shares and you're happy with what's going on, and you've seen that over the last few earnings periods, you've had some volatility around
my mic's cutting in and out.
Earnings results. This might be a decent opportunity for what I consider a little bit of a cheaper hedge, because the bottom line is that if you just go out and buy puts on the stock right now, where it's currently trading at a 73% IV percentile, you're paying a lot for that.
Right.
And so
how's it sound now?
In the past, what you've been able to do is maybe offset some of that by selling calls when you're looking at really, really low skews, because the calls were bid up. That's not the case that much anymore. That's come down. That's come down in the tech sector as a whole. So this trade that I'm looking at is what we call a broken wing butterfly, and it is in the November 1st expiration. So yes, it's definitely got earnings built into it, because we have earnings date at 10:30 as of right now. What I'm trying to do, or what somebody might consider doing, maybe that's a better way to put it, if they are long those shares and they want to have some way to give a little bit of a cushion to the downside should the stock sell off. And one of the ways that I kind of constructed this is I looked at what's the expectations for the move and what's been the expectations for the move over the last couple of quarters. It's around 9 to 10% is the expectation for the move. We haven't really gotten that. To that extent. It's kind of stayed within that level, that 9 or 10% level. And I'm kind of looking at where we're at right now and where this thing could potentially go. And so I looked at this broken wing butterfly at the 570, 550, 540 put strikes. Now the reason it's broken wing, because you'll notice the strikes are not equidistant, right? You've got 20 on the top side and only 10 on the downside. So that has a little bit of a bearish skew to it. And it gives you the ability to actually continue to profit on this broken wing butterfly should the shares go down below that 550 strike. Whereas if the 540 strike is a better way to put it. Whereas if you were to do a regular butterfly, at that point you would no longer be making money. So it gives you a little bit more of a cushion. Right when I looked at it, it was around $4. I think it's probably a little bit higher now, maybe $4.20, $4.30 or something like that. But it gives you a break even around 566, which it's going to take a move to get there. But like I said, I look at this more of a hedge.
Yeah, let's break this one down. On the November 1st weekly cycle, so you're going to capture that earnings event at the end of October. You got to keep that in mind. Also, might be a catalyst to the downside. Buying an unbalanced or broken wing put butterfly, buying one of the 570 puts, selling two of the 550 puts, and buying one of the 540 strike puts, paying roughly about a 420 debit on it. There's your risk, $420. At break even just below 565 or 566 to the downside, Kev. But even if this thing falls below 540, Kevin, because you made a broken wing, it's more than a double as far as profitability. And on a percentage basis on a $580 stock, you don't need that massive of a move to the downside. And Joe offset some cost because he mentioned you buy a put outright, implied volatility or the IV percentile rank is really elevated at this point.
For people that like to look at butterflies but get frustrated that butterflies move towards your strike and then away from the strike and you're directionally right but didn't make any money, this gives you insulation from that. Because if you get the move in your direction, and you need a move in your direction for this to be profitable, this locks you in at some level of profit if you get the move towards that short strike. If it keeps going, which frustrates people when it happens, this will, you remain profitable. You see that flat line there, way above the zero line, this remains profitable. And obviously the key level is the short strike. You want it to move into that 550 area, but the stock's overbought. You're going into maybe a bumpy time of the year, and this stock has run a long way, Tom. So if you get that move, this prepares you for that.
Yeah, and because you're buying it, you've got some flexibility. Say the stock falls before that expiration date, maybe you can manage or close a portion or all of it ahead of time if the market's open. But Joe, you mentioned, a trade like this, you can use it as maybe a hedge against a long stock position, but then also you can use it for speculation if you think, hey man, this stock needs a little bit of a break, right?
Yeah, no, absolutely. I think the difference is, normally when we come on here, we're looking for trades that'll work in multi-directions, right? This is not one of those. You need movement, as Kevin mentioned. So I think that's why, I look at it from two different directions. It could be from somebody who's maybe trying to hedge a big move. I mean, look, the stock is up, 65% year to date, around 95% in a year. So it's had a big move, and this is basically just saying, we don't necessarily see the prospects, for the company being dour, but at the same time, we just want to make sure that if we've had some gains, we have an opportunity to kind of hedge some of that downside without selling calls and without capping the upside.
Yeah, and probability of touching that 550 strike, which is the apex of profitability because you sold two options there. It's about 65% probability of touching that. So, probabilities aren't against you necessarily in this trade. You just have to have that directional bias correct on this type of strategy. All right, great stuff. As always, Joe, appreciate it.
Thank you.
Yes, Joe Mazzola, head of trading derivatives strategist at Charles Schwab, helping us with markets and Meta Platforms. We're coming up after the break. Megan Brantley from Lightfolio, she's going to take a look at sentiment data in Amazon. E-commerce and cloud stock is up over 20% so far this year. It's had some weakness over the last 7 trading sessions. Stick around.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Fast Market here on the Schwab Network. It's time for our cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, Vice President of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
All right, Megan, we're talking Amazon. Shares have had a nice run. We had a little bit of a dip over the last week or so, but probably that port strike being averted, helping this name along with a lot of other retailers going into the holiday shopping season. They make most of their money on AWS as far as margins goes, but this is still a retail behemoth, Megan, and they've got the Prime Days next week. What kind of data do you guys have?
Yeah, so, Amazon, if you think about just everything that this company offers consumers, it's massive. And we can really focus in on those two fronts, like you mentioned. It's cloud front and also it's retail front. And right now, just because of this event that it's got slated for next week, we do see a lot more hype and a lot more mentions from consumers just on that retail front. Whenever we look at overall web visits, we see a little bit of a spike and a little bit of a bump as consumers are checking out Amazon site and seeing, what things are going to be offered, where prices now, what kind of deal am I going to get next week? You've got a really savvy consumer, and I think that that's important. And that's something that Amazon is going to have to tackle head on, especially coming into this holiday season, because consumers are getting really picky with their discretionary spending, and they're doing a lot of research, and there's also rising competition, and especially rising competition from now really competent players. Whenever you look at this chart, you see Walmart is doing really well, and Walmart also has now a really robust e-commerce platform that a lot of consumers are already going to, because now Walmart has its own membership program, kind of like Amazon, and they're going and they're ordering their groceries from Walmart. Maybe they add in another item as well. And so I think that this is definitely one element of competition for Amazon. And then you also have the other elements, if you think of a Chinese rival in Temu, however you want to pronounce it. But we do see a lot of consumers who are talking about, okay, I'm able to find some things maybe a lot cheaper on this other site, that they don't have to go to Amazon anymore, and it's a similar shopping experience. And so this is definitely one to watch into this holiday season, as we do see some signs of weakness on the side of the consumer.
Megan, I'm starting to get this feel about Amazon of almost like an Apple-like ecosystem that you're in. And it's cloud, yes, it's e-commerce. Guess what's coming soon? Entertainment. They're getting bigger and bigger in entertainment as well. And it's amazing. You know what the biggest effect is lately? Walgreens, CVS. A high-profile CVS near my house closed.
Yeah.
Why? Because they're locking up the toothpaste in inner cities, and you can get it on Amazon and get it delivered to your house. I think the slow dominance of this company, and is there risks? I think the biggest risk to Amazon right now, I think the cloud pie is just getting bigger. I think the Azure competition is real, but Amazon's still winning. But it's that I looked at 2% cloud. IBM, Oracle, and Tencent. That might be what they should worry about down the road, as Oracle seems to be putting their hat in the cloud ring. I think, all things considered, this company is starting to build an Apple-like ecosystem. Megan, your thoughts?
Yeah, I think that you're exactly right. And you get all of these things seemingly added on and included with this membership that you're paying for anyway. So you can, have toothpaste shipped to your door and watch that NFL game. So there's so much to offer consumers, and this is obviously one of the largest names just in our ecosystem. Whenever we're looking at overall mentions, it might be the largest. I didn't check before I came on the show, but I know just from a mind share perspective, whenever you talk about cloud, and yes, this is a massively growing or massively rising tide that's lifting a lot of boats, and Amazon is still the major player here. It dominates about 74% of consumer mind share on our end, versus Microsoft Azure versus Google Cloud. And so I think that that's really important. It is still certainly the dominant force there. And I think another area that could be potentially untapped, that whenever you think about this ecosystem that it's created, is advertising. I know that last quarter advertising estimates, I think it was still north of 12, or the results were still north of 12 billion, but it was under what analysts were looking for. And so that was a little bit disappointing, but there's a massive opportunity for improvement here, because just think of all the data that Amazon has. Not only does it know your viewing patterns, it knows your shopping history, it knows its consumers really well. And so I think that there's a massive opportunity for advertising in this name as well that has so far maybe not been realized. I think that Amazon did a really good job of deploying its advertising platform.
We'll break out on SPX.
In fact, I think Netflix kind of copied Amazon's plan after it saw how well Amazon rolled this out. And so I think that that's another area of potential growth for Amazon that people may be underestimating.
Yeah, so if you look at their, they've got 30+% margins on AWS. You mentioned advertising. That grew 20% year over year, even though maybe it missed expectations there. So they've got an opportunity there. But when you look at the retail side, going into the Prime Days next week, this is going to be massive for them, and it typically is, where they're
1574, he's at $697.
Their e-commerce side also, after languishing for a while as cloud kind of took over, but that resurgence is also helping. Are they doing better against all their competitors based on what you guys see on your data?
The only area that they could improve upon is we do see a slight downturn in consumer happiness. And whenever we looked at that in previous years, a lot of that was due to the logistics side of things. Maybe shipping was a little bit slower than people expected, things of that nature. But now we're starting to see some consumers say, like, wait a minute, I ordered this this item off of Amazon and the quality is lower than I was expected. That the quality just wasn't there. There's a little bit of a mistrust in some of the items. I don't think that this is necessarily all of the Amazon retail experience, but it is enough to impact sentiment by just a couple of points. So something to watch there. And I think a lot of that has to do with just Amazon being really competitive with a lot of these other retailers that are out there that are from overseas that are taking some consumer eyeballs who are looking for deals and looking for those lower priced items. So I think that that's the only hint of caution I would say, is that we do see some consumers who are hunting for deals who are looking elsewhere, and other consumers who are looking for that premium experience on Amazon Prime and maybe a little bit underwhelmed with the quality of late. And so I think that there's an opportunity there for Amazon to kind of distinguish that. And I think on its last earnings call, it talked about spinning up its own discount site. And so I think that that's something that would be really, really well received by consumers, if they knew that they could go somewhere and kind of find those items and still have that Premier Prime experience. But at large, we do see
about done with lunch
this October event, so we'll certainly be watching next week to see how consumers shop around, and also how other retailers, step up to the plate, because we know that typically whenever Amazon has an event, other names, whether it's a Walmart or a Target, they like to try to offer discounts too, and so we'll be able to watch that come through in real time.
Oh, you think so,
You
huh?
did mention that they are opening their own discount segment to kind of compete against PDD, Temu, and some of the others there. And then also Adobe Analytics came out and said e-commerce sales are supposed to increase 8.4% from last year, which was a record year. That's got to be promising for Amazon.
More and more people are getting more and more comfortable with just pointing and clicking as opposed to going to the store, and it's just not going the other way.
I'm
Yes.
in that boat.
Two old dudes that are doing it. Yes, exactly. It's unanimous.
All right, great stuff, great data as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at Lightfolio, breaking down Amazon. So, Kev, how do you want to look at this? Because we got Prime Days, they report earnings on the 22nd, 24th.
You know what? Here's what it is. It's interesting, and it's an interesting point about it. Thinkorswim platform has the 24th unconfirmed. If you look on the trade tab, the higher implied volatility is November 1st.
Right.
So there's a little bit of
not confirmed yet.
It's not confirmed. Make sure you realize that before. And by the way, that's a great way to check. Look at the implied vol. The November 1st vol is higher than the October 25th vol. That'll tell you that it's not confirmed, or maybe even wrong, because the where the money's being bet is telling you it's the next week.
Yep. All right. So you got an example trade for us here. Break it down, because this thing fell 7 days in a row, getting a little pop today.
And it got crushed the last time it came out with earnings.
Right.
So make sure you understand
that.
Spend. They hate when they spend. So now, if they spent last quarter and they're not going to this quarter, what I did, Tom, I looked at just, remember, the old high is about $201.
Right.
Well, between now, I went out. I gave it a little time. After the earnings event, I went to December 20th, Tom. I gave myself plenty of time for this to happen, and I bought the 185, 200, 205 unbalanced butterfly, just the opposite of Joe's.
Yep,
His is bearish, mine's bullish, and his is a little wider. Mine's $15, $5. So, again, there's that flat line if it moves to the upside. And Joe and I did not speak before we put this trade in, but I went duration on mine was the key. And if you get a move towards 200, you know, it's a $15 call vertical that you're buying. And if it moves past there, you're still profitable.
Yeah, you still, you know, even if it goes above this. So let's break this one down. Even if it goes above the break even, is going to be profitability on this one. So a call unbalanced or broken wing butterfly to the upside, December 20th, 77 days to expiration. As Kevin mentioned, you got over 2 months in this. This is a longer duration type of position. You'll capture that earnings event. Buy one of the 185 strike calls, sell two of the 200 strike calls, and then buy one of the 205 strike calls. So in essence, you're buying $15 wide call vertical in this. That's bullish. Offsetting some of the cost by selling the $5 wide 200, 205 strike. That same common strike where you sold two options on the 200 strike is where you want it to go. But anything above the break even, if you pay a 480 debit, it's trading closer to $5 right now. Stock's moved up a little bit. But if you pay 480 debit, there's your risk, $480. With a break even just below 190 cap. So you don't need a massive move like we said on Joe's example. You don't need a massive move to the upside to be profitable on this one.
Yeah, if there's a bullish fourth quarter of this year and it goes back towards its all-time high of 200, that's in line with what this the posture that this trade assumes.
Yeah, and as you can see there from the risk profile, apex of profitability at or near that strike where you sold two options on, but even above 205, it's going to be more than a double or about a double on that if you pay $5, 480 around there, what we've got here on the screen. So keep that in mind. But a bullish on broken wing or unbalanced call butterfly to the upside there in Amazon. All right, let's take another quick break here. When we come back, we're going to take a look at AMD. The chipmaker stock is up about a modest 12% so far this year, but it is far off of its all-time highs that it hit in March of about $227. We're going to talk AMD when we come back.
AMD. Good talk.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere.
See what they can do with AMD here.
For free. No place better than the Schwab Network.
It's popping. NVIDIA rises today. Why today's job report is boosting chip makers. By Barron's.
Welcome back Fast Market here on the Schwab Network. Before we take a look at AMD, let's get a quick market update on equities because we have surged since the start of the show here. We got the S&P 500 up 0.6%, Dow up 0.5%, over 200 points now, NASDAQ up nearly 1%, and the Russell 2000 leading to the upside, up 1.4%. So regaining some of the massive move that we had post-jobs data. We went to basically nearly flat on the session, but now seeing a little bit of a resurgence during the show. All right, let's get into a discussion about AMD. The stock is up a modest, well, it's up 14% because we're seeing a big 3.5% jump today. Let's bring in George Tilla, senior markets correspondent here. George, AMD, it's fallen, like most AI stocks have since hitting all-time highs earlier this year, about 227. Yeah. Modest gains right now, and I think the growth rates last quarter when the stock fell weren't what the street expected at this point. But hey, this is the number 2 player in AI, right?
It is, and that's the thing. If you look at this, the price action just going back to Q1 of this year, it was over $200, and it fell quite aggressively, and it was really based upon the expectations of tremendous amounts of growth and competition with companies like NVIDIA. The same case with Dell. If you look at Dell, it also moved quite aggressively and has pulled back tremendously since then. But I think things are looking a little more constructive for AMD. I think the price action has actually come in maybe sufficient enough to now match some of the earnings estimates, which are actually progressively increasing for next year. And when it comes down to GPU chip technologies for data centers, NVIDIA is still, of course, the leader. They got 90% market share. They have an effective monopoly. But if you look at the data inference chips, AMD is actually gaining traction as more of a general purpose technology. It's a little bit cheaper. Some say it is $650 as good now. Or not quite as good, but close enough to AMD's, to NVIDIA's, forgive me, data inference technology chips. But nonetheless, the core business for AMD is still CPUs, but they also have their industrial chip segment, Xilinx acquisition, which again is another area of their business, which actually makes AMD a little bit more of a complete semiconductor company across the consumer spectrum from a CPU standpoint, data center, enterprise, but also the industrial and automation segments as well.
George, Oracle adopting the MI300X was good news for AMD. They've got 3 products coming out. I'll give you a bunch of numbers. MI325X, MI350, MI400. These are all supposed to put them on the map in terms of AI. They've said that before, and NVIDIA keeps extending its lead, it appears. Are they finally ready to compete with NVIDIA and be a true competitor? Or are they just, if NVIDIA's all sold out, we have to buy AMD? Not the worst place to be, but it's not what they're looking for, George.
Yeah. So when it comes to graphics processing unit interface technologies, NVIDIA is still the leader. I think AMD's got a lot of catching up to do in that regard. But AMD has always been in the GPU segment, in their gaming technology chips. Now they're expanding their offerings to the enterprise data center space. In inference, in other words, less graphics, more data crunching.
We have a knife here on SPX.
That's why Oracle has picked them up as a major partner, and they're expected to continue to grow their sales as a business going forward. When you look at them numbers-wise, it's about 25 to 30%. But the kicker for AMD is you just have to look at the trajectory of the 4 quarters coming up. In other words, the back half of 24 plus the first few quarters of 25. The estimates are expected to grow from an earnings standpoint close to 60%. Now, that's still less than NVIDIA, both in sales and in earnings estimates. But one of the interesting things about AMD and NVIDIA is if you look at them relative on a PE basis compared to each other on a next year's numbers, they're both trading around 30 times forward earnings. So, looking at the comparisons of both these companies, NVIDIA is still cheaper, but if you compare the estimates for earnings for AMD, assuming all else equal, there's no market pullback, no China issues, et cetera, then AMD looks like it's got some promising movement going forward as it starts to earn more into its price versus price accelerating faster than its earnings. That was indicative of what happened earlier this year. Now, lastly, look at the chart. If you look at the chart in the last few weeks, assuming the markets close higher today and AMD closes higher, there'll be 3 consecutive closes above the 50-week moving average, which corresponds closely to the 200-day moving average.
Yeah, a little bit of a resurgence here over the last several weeks, and they've got their Advancing AI event next Thursday. It's been overshadowed by the robo-taxi event out of Tesla, but that might be a catalyst because the last couple times they've had events like this, stock's done pretty well post that. All right, great stuff as always. Thanks to George Tillis, Senior Markets Contributor here on the network. So taking that into consideration, Kevin, on my example trade going into that AI event, so implied volatility levels are elevated in next week's October 11th cycle. So I looked at it that way. I looked at a bullish call diagonal where I'm going to go out to the October 25th weekly cycle. Now, why did I go out there? Well, earnings is on the 29th, so I want to avoid that earnings event, right? So went out to the October 25th weekly cycle, 21 days to expiration. Bought the 165 call, which is basically at the money at this point. Actually in the money now. The stock has moved higher. Buy the 165 call on the October 25th weekly cycle. Sell the October 11th that expires in 7 days.
No, go clean my glasses. I can't see very well.
Capture that AI event on Thursday. It's $10 wide bullish call diagonal. We've got paying 640 debit on it. It's trading 720 right now because the stock's moved up about $1.50 since we started the show. So keep that in mind. But the debit you pay is going to be the risk on this position. Well, why did the price of it go up? Well, because the stock went up, right? It's going to probably be better set up where your break-even's lower. Your break-even about 167 on this one, and you'll have that ability to roll that short option a couple of times. But Kevin, you're a $10 wide bullish call diagonal. You're only paying roughly, well, we get 640, but around $7.
The key difference that our viewers need to understand.
What's that?
The difference between the calendar spread and the diagonal is the delta. And how do you get the delta? By embedding that call vertical into the calendar spread to make the diagonal. That gives you more teeth, right? The delta is more shares on the upside. So this is a $10 call diagonal, selling the higher implied volatility, buying the lower. So it takes advantage of exactly. You're not going against the curve. You're letting the implied volatility go up, and then you're taking advantage of that. So this is one that'll take advantage if there's good news. The risk is that there's not good news or there's disappointment. So that's being said, but this is in the calendar spread family, but just more delta based on that vertical.
Yeah, and because you're buying that deeper in the money call on that. And why is it trading less than the width of the call diagonal? Well, you're buying about a 47% implied volatility on aggregate in the October 25th 165 call, selling about a 54% implied volatility in that October 11th series that actually has that AI event. So this is definitely one to keep an eye on next week, even though it might be overshadowed by Tesla. But a good look at a call diagonal. And you've got some assignment risk on that short option over the next 7 days. Keep that in mind. All right, that's going to wrap it up for us today here on Fast Market. Be sure to stick around right here on the Schwab Network. Next Gen Investing is coming up.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades.
Mike's still on here.
No agenda, no hysteria, just good old-fashioned analysis.
Hello, Mike. Subway, you got your microphone on.
Stay informed. Stay ahead. Tune in to our
I can't hear you, but there you go.
The market is a multi-trillion-dollar beast.
When there's profit there, you take it. That's always going through my head.
My job as a trader.
My job as a trader is to make money.
Degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because
It just comes natural to
It
me.
is incredibly competitive, and so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting people?
She is kind of cute. There I go being a misogynist again. I got to work on that. Oh boy. I am ladies' man. I got 7 girlfriends, 1 for each day and 1 in each state. When I used to do inventory, I liked traveling around, so I told everybody on the bus, I said, I want to have a girlfriend in each state. I had one in Texas, Tennessee, Louisiana, Kansas, Missouri, Oklahoma, Tennessee, and Texas. Bam. And every girl in each state kisses a little bit different. Randy's got Still on his mind.
It's all fake news. It's phony stuff. It didn't happen.
I forgot about the one in Hawaii. So let's see what we can find. I still want to keep an eye on the SPX, so I'll put it up on another monitor here. I'm waiting for a knife. It's hard to tell the buys on these because they all are zeros. Can't see the blocks. There's Jenny Horn.
Noon hour here in Chicago. We're
She got the secretary look today.
Averages also, strength here in the 10-year. Crude oil, weakness in gold here, and dollar strength. So we're seeing a lot of strength today across the board, Alex, as a result of that blowout jobs figure. Although I have to say we've come off of session highs quite a bit in real time.
Yeah, and I don't think that it was a huge surprise to the market. Obviously, you see reactions, but this has generally been the trade, at least in the bond market and in the dollar index.
Good morning, Randy.
Leading up to the report. I think some of the other data that we got throughout this week kind of
Good
set
afternoon.
the stage for this, but I think the magnitude of the beat, the massive revisions to the upside as well, is sort of the bow on top that led to this jump in the equities and the pretty steep repricing in yields. But for the most part, I think the market was expecting strong numbers. Maybe this was just a little bit stronger than they were expecting.
Yeah, because coming off well above expectations as far as jobs added, unemployment also ticking modestly lower. So I do think there's the thinking, because this was so much of the focus of the Fed on the last meeting, that the labor force is definitely being watched right now very closely. Obviously coming off highs, but still markets higher, all things considered today. We will start things off as always though with upvote and downvote. We'll chart and trade our upvoted names. FOMO today, we're recapping the week that was in Amazon, as that name does tend to have a lot of news, but today it's specifically announcing adding around 250,000 seasonal jobs to capitalize on this upcoming holiday rush. We'll also be diving into Rivian falling after the company did slash its production forecast, missing its third quarter delivery expectations. And we'll close things out with Under 30, revisiting all things Spirit Airlines after discussions with bondholders over a potential bankruptcy filing. So what that company now looks like following their failed merger, we'll dive more into with George Tillis later on in the show. But Alex, as always, with upvotes and downvotes, we actually have a nice theme today. You can tell it's noon here in Chicago because we got food on the mind.
We do, and one of the names we're going to talk about is Chipotle, which we'll get to in a moment. And last night I went to Chipotle, and it reminded me, hey, post-split Chipotle, I thought it was going to be one of the most actively traded names, what we talk about all the time. We just really don't. So coming back to Chipotle will be fun, but that's not the first one on our list. And of course, as always, upvote, downvotes, not endorsements, not recommendations. Wingstop is the first one on the list, and that is, of course, stock ticker WING.
Wingstop, I believe, of all
Well,
of
that
these
makes
brands,
sense.
is considerably here our best performer and by a nice margin. Yeah, it's up 61.5% on the year. So it has pulled back, I mean, about 4.5% from its highs, but up 142.5% off of lows. I mean, this has been a staggeringly good chart in a difficult discretionary environment. So Citi today raised their price target on Wingstop to $4.40 from $4.17. Keeping a neutral rating, the firm does continue to see significant white space to the long-term Wingstop story. However, they're unsure how shares could react to a confirmed deceleration in one-year same-store sales trends, particularly when they expect macro data will continue to point to growing macro headwinds for that consumer. So I think a good point. They're not saying, necessarily dump your shares or head for the hills by any means. They're just saying that, hey, with the spending environment, we could potentially see less spending on some of these dining establishments, Wingstop being one. They have really benefited from easier comps because the rising prices of poultry and the chicken wing shortage were definite headwinds for this company in the last several years, which now they've been able to successfully get through. So I commend them for
chicken
that.
wing shortage?
A few of their stores rebranded to Thigh Stop. That was madness. That was like pandemic madness.
I've never heard of that one.
Was supply chain hiccups, of course, but they raised the price target, so they're not like bearish.
Right.
The commentary wasn't like glowing, but they're still seeing a stock making a new high for the year at 440. Neutral rating maybe reflects the fact that, it's only, let's call it 8% from where we're currently at. Next one on the list, though, I know is one of your favorites, and that's Domino's. And when we say favorites, of course, we're not talking about the actual stock or whether the stock's going to go higher. We're talking about maybe a place that you like to pick up a pizza from in the case of Domino's.
Yes, not a favorite stock pick, a favorite restaurant of mine, definitely. And I know that I get so much shame for that living in Chicago, but I don't like Chicago pizza, so I am then for the national chains. And actually, something interesting ahead of their earnings next week, they do release Thursday.
So they're filming out of two places, I
They have
think.
this new New York style foldable pizza. I'm dying to know how that's doing because I feel like you have to be in New York to get that true pizza, but nonetheless, that's something that they have mentioned has brought in some enthusiasm. They're also continuing to try to innovate. This company was really one of the pioneers of delivery when they had that tracker and they redid their entire menu. But now I think we're looking for the next leg of growth because some of their franchise business, the restaurants are struggling. And again, we're expecting more deceleration as far as same-store sales trends when we get more clarity on this name next week. But today, Wedbush did actually reduce its price target to $4.70 from $5.10 while also keeping an outperform rating. Again, I feel like where the price target mismatches the rating, but nonetheless, they did reduce their third quarter domestic same-store sales growth estimates as Domino's digests the impact of the burger's aggressive pivot to value. This is hysterical to me. We were debating this prior to really reading the story, and they said that we're focused right now on value. So that's going to be led by McDonald's. It will limit now Domino's transaction share gains in the second half of this year.
Well, time out on this. Is Domino's not value?
So that's the
Maybe
thing.
maybe a different level. I'm thinking compared to a lot of its competitors, I would assume Domino's is on the cheaper side.
Absolutely. And even I was just price shopping for curiosity's sake. Papa John's, which I would say Papa John's, Pizza Hut maybe are considered also the value plays. They're exactly in price parity with Domino's. So yeah, I'm not sure what pizza you could get for cheaper. That's honestly what drives me to Domino's because it's cheaper than buying some of the local chain pizzas. But they also removed this name from their best ideas list. I just think it's an interesting narrative. To me, we'd have to be nearly in an economic depression for you to say that we're going to be price shopping now, going to burgers instead of pizza. If you're a pizza person, you're probably still selecting pizza, just trying to find the best deal.
Yeah, and I guess I get the sentiment. McDonald's is cheaper than Domino's, but say you're in a large group, say you're a classroom setting or a work environment, or you're watching a football game. The ease at which you can share pizza is far easier than, hey, what does every single person who's at this event want? And let's individually order it from McDonald's. So there's always a market for pizza. Maybe it's incrementally more expensive than some of these other fast food chains, but hey, jobs market was good. The growth continues to be pretty good. I do think that there's a lot riding on this particular earnings report because if you recall, Jenny, last time around, over a 10% drop in the stock really didn't set the greatest tone for this upcoming quarter.
No, it really didn't. I actually feel like this name has been quite disappointing on the back of most of its earnings this year, but substantially so. To speak to Alex's point, I mean, you could see that nosedive after their last earnings. Now, I do think, yeah, there's I mean, I guess maybe I'm biased because I'm such a pizza person. I mean, you could ask the Schwab Network office. We got pizza delivered today. So it's just a definite group setting type of deal. But next name today is Chipotle. And Chipotle is hanging in there on the year. I mean, this name suffered a pretty massive drop on the session following when we heard CEO Brian Niccol was leaving, of course, for Starbucks. So I think now reeling from the fact that he was like the crown jewel of a lot of the types of concepts that Chipotle has laid out. Chipotlanes, also to me, they basically pioneered the whole idea where you could see your food being prepared in front of you. Now, several chains have copied that. Cava, Sweetgreen, I feel like are those that are trying to mimic Chipotle's success. They also have various ghost kitchens. Like, I just feel like they're always on the forefront of technology. They also now are going through like an AI innovation where they're trying to utilize various machine learning to then like peel avocados and do some of the various operations of the store. I know you got Chipotle last night, but I actually got Chipotle Sunday. I've been getting Chipotle an embarrassing amount lately, which is probably why I'm taking a break from Domino's. And I know there was concern over quality that like once Niccol left that we could see some quality.
1, 2, 3.
And there's like now a whole like viral feed on TikTok about the quality of Chipotle.
Quality or quantity?
Are we still bullish?
Well, quantity, you're right. I think both.
Are they really going to change how they're making it? I mean,
No.
the effort behind it, I suppose. What I will say is I used to make this joke on air a lot. When I was younger, this was like one of the food groups for me. I would go to Chipotle several times a week. It's convenient when you're younger. You can kind of talk yourself into it being a healthier option. Portions, at least in the past, I don't want to get into an argument about whether or not they're still this way, but were, I would say, impressive enough that you'd be full maybe after the gym. I went there yesterday. Hadn't been in a while. They have this new smoked brisket option. Good stuff.
Okay, so I had nothing but positive reviews. I feel like my bowl was enormous. It must have been like 15 pounds. And I think I got steak for the first time in like 10 years. I was like, this was amazing. So I had nothing but positive.
So here's the maybe good for Chipotle, but maybe the bad. We're talking about value. What do you think it costed? I got double meat and guacamole.
Oof. $17, $18.
$24 and some change.
$24.
I had 17. That sounds about what I would expect.
Yeah.
24. I thought they might have hit a couple extra buttons in there.
I mean, yeah, because I feel like my bowl was like 15, but I didn't do double meat guac. Yeah, shoot, that is expensive.
Yeah, I think that's a next leg up. So I've been saying,
I can't stand your pizza.
Jokes aside, this is I'm kind of saying this tongue in cheek, but I mean, if you're seeing places like Chipotle,
I have a feeling she doesn't like it.
Level higher in prices, perhaps we are going to see some sort of more reinflation or.
She seems like a classier chick than that.
No kidding, $24 for a Chipotle bowl is egregious. So
it's like 50% more than I would have expected.
I know, back in college it was like 10 when you were like set for a meal for days. But moving on to our next name today, because we could obviously talk Chipotle all day long. We're looking at Dime Brands, which think now IHOP, think Applebee's. I mean, to me, the Fuzzy's is a franchise I know that you're familiar with, Alex, that I was not familiar with, but several brands that they operate under this umbrella company. Now today, Truist downgrading shares to hold from buy, reducing its price target to 37 from 66, so a substantial cut at that. But they did say that potentially severe same-store sales underperformance for Applebee's versus its peers, they can expect based on some card data, which is shaking now their confidence that improving same-store sales will be a near-term catalyst for these shares. The analysts had expected Applebee's deep value focus and new NFL partnership to drive improving sales in third quarter, and said the company's sales decelerated even as industry trends improved, which they said highlighted Applebee's difficult market position. They recommend stepping to the side until the path to positive same-store sales becomes more clear. I have to say, all of these names are facing relatively difficult same-store sales as we head into this next reporting period. That's been a theme for a lot of these restaurants, especially those with less margin flexibility. Some of these names that do operate in more of a value world, they just don't have the flexibility with margins as like a high-end type dining establishment. But this chart is, I mean, you talk about the opposite of everything we just looked at in like Wingstop or Chipotle or Sweetgreen, some of these winners on the year. We are down 34% this year and off of highs by over 38.5%.
Yeah, and for those wondering, you maybe haven't heard of Fuzzy's, it's incremental in terms of how much it impacts this company. 166 million in revenue is what's expected for this entire year. For context, Applebee's, which is his largest segment, is closer to $4.2 billion, and that's actually declining from last year. So it's really apples and oranges when we're talking about how much more important Applebee's as a piece of their puzzle is than Fuzzy's.
Okay, so have you ever, when was the last time you went to an Applebee's?
Ooh. It was probably about the last time I went to Fuzzy's, which is college time.
I don't think I've been to an
IHOP, similar.
IHOP, at least, I believe there's IHOPs in the city of Chicago, so I think I've frequented an IHOP more than I haven't been to an Applebee's probably in 20 years. But now, since we're talking about it, I may have to make a visit for some channel check.
There's some value.
Yeah, that's a meal you can get, and I think you can get drinks relatively cheap there too. But I digress. We'll dive more into our upvoted names today. We will be looking at Domino's as well as Chipotle, two fan favorites here on Next Gen Investing. Stick around, we'll be right back.
Do 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 do. Do do. Okay, Mike has left, so I can jam. Let's get this market going. We have approximately, let me see, 11 minutes. And we're getting ready to bounce up here. Now see what I've done here? Does anybody know what that is? That's called a head and shoulders. So we'll come up and hit the shoulder line and stop. This was a 1, 2, 3.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage.
Let's see what I can play. I'm going to play a song. This is one that I learned how to, one of my first songs I ever learned how to play. For you guys out there that got stuck with child support payments, I always played this to that crowd when I was out traveling around, and we're going to play it right now. This is from Buck Owens, and we're getting ready to come up to the head and shoulders right here.
Child support, Lordy help me pay my child support. Well, when I got married, they said it was forever. I should have been smart and said
no, not never.
First the rent
came due, then the babe came too.
The next thing I knew
was a brand new father. Child support, child support. Lordy help me with my child support.
You better not act hokey, or they'll put you in the pokey. Lordy help me pay my child support. Welfare directors and
Bill collectors,
repossessors and small claims court. Well, it ain't funny when you're going hungry, paying alimony and child support. Child
support, child support. Lordy help me with my child support.
You better not stammer, or they'll put you in the slammer. Lordy help me pay my child
Support.
Beans and taters and 3 kids later. was court. The judge said, son, this here's an order. It's bread and water or child support. Child support.
Child support. Lord, help me with my child support.
You better not holler or they get you by the collar. Lord, help me pay my
Child support. Nailed it. SPX. 1, 2, 3.
letter from the man who said, but you better send that child support. You better send it today. Say, if you don't send it, say, we gonna come and get you. So you better send it or else. I didn't know what else was. So I went out to town so we see it.
Dadgum, you buck. What the puck? You gotta pay that child support. Can't argue with that. So, Rickham got him. Thanks. Chuck says yay for the IRS. $160 spam calls in 3 days. Driving me crazy. I got to tell everybody I got a new phone number. I hate it, but I had to do it. I love my number. Got it. I've had it ever since I got back from Hawaii. I might even had that number in Hawaii. I don't remember. But I know I had it when I started my business. I turned, well, Mama says it bees like that sometimes. I got to call all my bill collectors and say, hey, man, I got a new phone number. Pentagon confirms Israel-Iran war live. Oh. Who thinks that J.D. Vance won? America-based, Tiger Boeing. Tiger Boeing The rockets rain in on U.S. military base in Syria. Thank you, Joe Biden, for being such a great president. You piece of shh. Where are them red lines there, Mr. Biden? You know, I thought Jimmy Carter was bad, but you are definitely 5 times worse. Jimmy Carter was a good man, at least. And that's a fact. I have to give him. Jimmy Carter turned 100 years old. He's the first president to ever do that. So I have to respect him for that. I mean, look at him. God, he looks bad. Look at that man. Well, I don't get this. Okay. Always clean?
Hello, can you hear me?
Yeah, I can hear you. What's up?
My name is Anna from Marketplace. How are you doing today? Well,
You're from where?
from Marketplace.
Yeah.
Call is about your health insurance with the Marketplace, and I believe you have insurance with the Marketplace, right?
Yeah, could you go ahead and put me on your no-call list, please? They hang right up on you. It's unbelievable. Obamacare. I want nothing to do with you, Obama. Your account statement is available. Okay, we got some knives coming on here. Randy? Let's look for another knife. Are you there? Randy? Here we go. We're getting ready to do some knife catching. Fat cats are back. I think we can bounce off this and hold support. That'd be number 4. Or we catch it here at the 200 if that doesn't hold. We got a double confirmation there, brother, with another mother. Uh-oh. Get ready. Let's see if anything happened here. I know our base just got blown up there in Syria. Russia's getting involved now. I mean, Israel attacked Russia's base in Syria, so that's not going to be good. And we got a bunch of pussies up in the White House that have let this go on too far. It would have never happened under Trump. Never. I can guarantee that. Almost 99.9%. Not 100, but real close. I think Diddy's going to go to prison. Oh, 270. Okay, get ready, boy. $57.20. There it is. Come on, baby. Go, baby, go. Go, baby, go. 245, 255. Damn, what am I doing here? I'm hiding it. What the fuck? What's going on? Oh. $2.90. Did you get in, Randy? That's $100. 100 to contract right there. 310. Oh, take it, take it. Whoop, 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 whoop. 290's great. There ain't nothing early about that. Jimmy keeps up. I'm on a roll. Woo! You know what this is going to cost? A 1, a 2, a 1, 2, 3.
I was just feeling sick. And it was the worst day. Mom was
Never found a four-leaf clover, weakness love to you. Rabbit foot, no lucky star, magic wisdom tree. Well, I got lucky, I got lucky when I traded you. Ooh, pull around my shoulder, horseshoe on my door. I got some for Terry tight, and who could ask for more? Well, I got lucky when I traded you. Just got rid of lost for 50, baby. Did you love me? I'm making it. It's really here to stay. Well, I got lucky when I traded you. Fingers crossed. Go ahead and take your profit. You might get lost. I got out at 470, all the way from 185. Well, I got lucky. $5. I found you. Yeah. Yeah. That was pretty. Oh, yeah. Can't complain about that. Damn it. Did you see that coming? I saw it coming. That was beautiful. I mean, that's really making me smile big. Oh boy. That was just beautiful. I mean, that just... If I had a one hit, I'd take it right now. I saw that big candle right there. I mean, that was a leading indicator for me. And then when it failed to 63, boom, all we had left was the 200. And then it hit my support almost perfect, 57.1878. Oh, man. George and Alex.
Been a pretty dismal run for the better part of the last few years.
So I'm 4 out of 4. And that last one made up for all the other 3 trades I did earlier, plus some. And I was out faster than the other ones. I mean, look at that pop back up. I mean, that's just plumb beautiful. Sexiest, sexy, sexy, sexy. I'm glad you were listening, Randy. Tell that person that called me a misogynist that that's true. I am. I love women. Hello, this is Brandon. Make sure that I get my 10% as you leave the door tonight. Somebody sent me a message. Had to have been on YouTube. You know what's the benefit of being white and moving to Hawaii? But you got to live there. You can't be a tourist. Girls, they're everywhere. From France to China to the Philippines. We're waiting for the 200 again. We could bounce here, but I'm going to wait. I mean, after that last trade, I don't really need to pushing my levers too much. I'll just wait for the big one. Okay. I was watching this here. Uh-oh. Trying to fake me out. Hey, Jimmy. I was watching this show here. He had some guy working in here. It looked like he just woke up out of bed. Hair was all ratted around everywhere. So I got on here in this chat and I said, where's that guy's, looks like that guy just woke up. Doesn't he know how to wear a hat or comb his hair or get a haircut? And they kicked me out of there for a day because I said that. I said, he looks like shit. If it was my joint, he wouldn't be working for me looking like that. Well, here in Ohio or wherever, we don't have that law where you have to wear a hairnet. I said, I don't care, man. That perspective is having hair in your food. They kicked me out for a day. And I sit here and watch them make pizzas. But I don't watch it anymore, not since that day. I'm not as interested anymore. Drop. Randy, heads up. I'm going to explain something about basketball here for people that are new to trading. This is a real good lesson to learn. You know what gravity is? Let's say the basketball, you're at the highest level and oh, here we go. $57.40s. Get them at 170. I wouldn't go in big, but this is what I'm going to get ready to explain. 170. There's a fast scalp. So let's say you're at the highest level. You're up here, you're at the very top. Okay, I'm going to take profit here. $2. Out at 2. And I got a few more left. But this is something I really want to get across. Okay, so gravity. This is something you learn when you're in grade school. You're up here at the top and you drop the ball down here to the bottom. Well, this is your floor. So when that ball bounces, it's going to bounce up. It's going to bounce down again. It's going to bounce up. It's going to bounce down again. It's going to bounce up. It's going to bounce down again. And eventually it just lays flat. So that first initial trade we took was a big knife and it bounced up. It didn't go all the way to the top because gravity is pushing it down. Same thing happened again. It bounced on down. It bounced up, but it had a lower high. So gravity pushes it down. After so many times, it gets weaker and weaker and weaker, and you can't expect to get as much as you did the first time it bounced. And it'll bounce back down. Then you'll get a little bitty bounce and it'll bounce back down. Then it might just go ahead and break down. So when you're in that first one, that big scalp, everybody's jumping in it to regain where they were because it happened so fast. Then the next bounce, it might not go up as high because gravity's starting to push it down. Less traders are trading it now. They got their thrill and they're out. So you got less volume, less volume, less volume. Then finally it just kind of, everybody gives up and then we get a knife and it drops down. So don't expect as much every time it bounces up. Don't expect as much. Don't expect a double top. You want a fast scalp, you want to get in and out, in and out, in and out, in and out. So it's always good to grab it that first time to get as much as you can out of the trade. Not always the case, but I'm just saying. I lived in Honolulu. I don't live there no more. I live in Missouri. But I lived in Honolulu for a year. St. Louis Heights. And I worked in Maui, and I worked in, I can't remember what town it was. It was a 30, 40-minute drive every morning. If you know anything about Hawaiian traffic. Oh man, it's now 2:07 Eastern Time. Man, that was a beautiful catch. Okay, we're getting to that 125 area on the 5740s. Tiger's having a good day today. TIGR. God darn it. $125. We might get these for $1. Let's see what Spy's doing over here. $110. $110. I don't know. We got a yin yang down here. We could go lower. But if we went down there, almost grabbed him at 110. $57.16, 64. Like, we got a 1, 2, 3. There's a buck. There's 85 cents. Okay, get ready. I think we're getting close. $0.90. I think we're getting real close right here. Damn it. I should have grabbed him here. 85, I don't think it would have given it to me. I just don't want to push my luck now. U.S. says military carries out strike against multiple Houthi targets. Who's military? U.S. officials say military. What? President Biden says Israel has not concluded what they are going to do about Iran's strike. Says I would think about other alternatives to shrinking oil fields. Says should remember that no administration has helped Israel more. Oh, come on, man. Quit pleading. You think Biden? Oh, God. He doesn't understand. It's now or never. I'd bomb the frick out of their oil fields. Never mind. I'm going to pull an Alex. Well, that Corinne Jean Pierre holds a briefing with reporters. She has no conscience, none. Yep, there's 125. That'd have been a good little scout. 90 to 125 at least. $1 to 125.
Vice presidential Republican candidate did not say he'd accept the outcome of the election. They haven't even accepted the outcome of the last election. So I'm concerned about what they're going to do.
Are you making any preparations?
Has he got a news conference?
Domestic security.
I always get those briefings.
We got to move on to Kayla, and then we have to do a couple more. Hi, Mr. President. When are you considering imposing sanctions on Iran, and would you include oil in those sanctions?
That's under consideration right now, the whole thing. I'm not going to discuss that.
And just on your comments yesterday on the port strike, you said, by the grace of God, it's going to hold. Is there any reason you think that this
Well, there's more to
temporary
do.
suspension?
A month from now, there's more to do in terms of everything from the whole notion of mechanization of the ports and the like. There's more to resolve.
God.
Thanks, Green. Thank you, Mr. President. Last night you said that there's still a lot to do to avoid an all-out war in the Middle East. I mean, firstly, aren't we pretty close to that definition already? And secondly, what can you really do to stop that happening?
There's a lot we are doing. The main thing we can do is try to rally the rest of the world and our allies into participating like the French are in Lebanon and other places to tamp this down. And but when you have proxies as irrational as Hezbollah and the Houthis, and it's a hard thing to determine.
So in other words, you keep your mouth shut.
Please tell me.
I said I'd take a couple questions.
All right, you're the last.
I think she's increasing her credibility.
Take some more. Toulouse, you're going to be the last one.
Thank you, Mr. President. Thank you for spending some time here with us. There have obviously been a number of crises that the country has been facing over the past several days with the hurricane, with the port strike, with the situation in the Middle East. Can you talk about how your vice president, who is running for the presidency, has worked on these crises and what role she has played over the past several days?
Well, I'm in constant.
We're at 155.
She's aware we're singing from the same song sheet.
I've had enough of him. Randy, did you take that? I was in calls. But I'd take a little break. You went and had a one hit after that trade. 4 years of Kamala. It'd be more word salad and giggling and ha ha ha. We're so we don't care if we're getting nuked. I don't see how they can let that man be president. It's abuse. Man, look at that, 180. At 100%. That man can't think. Yeah, it was live, or it was recorded. It was today. It's the first press conference I've ever seen him do in years. Israel kills. Uh-oh. I think that already happened. Oh, there's me, Mary. I know her. The war has spread to Russia. I don't think I'd be swinging much this weekend. I wouldn't want to take that big risk. Mama, I'm excited. I'm almost out of breath. I got an A+. I even took my shoes off. These shoes are so comfortable. Oh, these are my sandals. No wonder. I could wear them.
CEO of RGP, welcome back to the show. You just had your quarterly numbers. We want to see what's driving growth. You said you're executing your cross-sell strategy. A lot of
The calls are
digitization
depreciating
by
a lot now.
companies that are ever growing. Tell us about.
They're not worth as much as they was. These are at 140. Right, just a little bit ago, they were worth about $4 when they were here. So I'm going to take a little break. I don't want to overtrade. Remember what I said about gravity? We still got a long ways to go before we break out again. I might go get me an edible tonight, a sleepy one. Or just sleep. I'm gonna walk around the building. Walk down the block and back. So I'll be right back. Do you think we stay range bound with SPY for the next week? Let me look before I take my little walk here. We sure definitely want to start tightening up, I think. I think it all depends about the news now with how the polls are going. This is the thing. If we have a split government where we know that the House and the Senate are controlled by different parties, we should be able to maintain bullishness. If we're one-sided, where one party controls the House and the Senate and the legislative branch and the presidency, we could have a very horrible crash. So we actually want to have a split government at the top. I personally think that we could pull back next week to at least 8 points and still be bullish and still be range bound if we're able to hold this support level right here on the SPY. If we can hold 562, a little bit under, the 9 EMA will still be range bound. If not, if we can't hold that 561.90, 562 area and start showing some weakness under the 9, this is on the weekly, we're squeezing right now. We've got a doji. So if we dip down, something happens this weekend, and we still yet hold 562, 561.90 in that area, I can't be exact, we'll be range bound for the last 3 weeks. If not, we'll easily drop down. If we can't hold that next week at 562 area, we'll easily drop down to the 21 and bounce strong off the 21. That's my opinion. But if we stay above 562 area, close to that, we'll still be bullish, and we can still take the bounces every day. We might have one good day of sell-off next week, and then gradually go up. But it really is going to depend on if we get into it with Russia over this Syria deal. And Biden, I mean, he's a diplomacy. You see what their diplomacy has got us. They got us paying for giving Iran probably one of the richest pockets they've had in a while to buy out, to start these wars and to fund all these proxies that they have. He's too damn stupid to realize it. Or he knows it and just don't want to say it out of shame. So that's my biggest concern now. It's not the ports. It's not us going into a recession. It's just whatever happens in the Middle East this weekend. That will probably determine what kind of week we're going to have next week. And Kamala, she ain't going to be no better when it comes to foreign policy. Jamie Dimon denies Trump's claim that JP Morgan CEO has endorsed him. That's just my opinion. Everybody has a different opinion. We bounced off that a little bit. 130 to 170. The market's very bullish. U.S. military says it conducted strikes on 15 Houthi targets, controlled areas in Yemen on Friday. So we're fighting. I need to go for a little walk. You're not bullish? These options are depreciating pretty fast. I bet you we drop back down here to 1, 2, 3. I'll go for a walk so I can wake up. And I'll be back for power hour. I'll be back way sooner than that. It won't take me long to get this over with. Where's Caroline today?
Panel on this, but if you could touch on it, did it make any difference in your investment strategy today?
Well, it's great to be with you, Nicole, as always. You know, as far as my investment strategy goes, I think we're actually getting a lot of the same. And now I'm going to come out and share maybe a little bit differently as I'm actually in the hard landing camp. But it's kind of weird right now, you know, whether we get really good jobs data, which, you know, this is being known as, and then people are saying, oh, we've avoided a recession. If we get bad jobs data, the answer is, oh, the Fed's going to cut. If we get neutral data, the answer is, oh, it's a soft landing. All answers point to right now, it's going to be a bull market, at least here for the short term.
You can't go off the jobs data unless you figure out what are part-time jobs into the Christmas season, you ding-dong. It doesn't matter right now.
Assessing what's going on here. Yes, they did beat last month by over 100,000 jobs. That's significant. But we just got to remember real quick, though, that the jobs information has been revised on a consistent basis. So let's not get too excited here.
Exactly.
The second thing to note about this is that over 187,000 of these 154,000 jobs were literally government jobs. So it's 72%. Anytime that we've exceeded 60% as a nation where we're going into government jobs, we've actually been in a recession at that moment and point in time.
Yep.
And so I'm not making up the statistics. That's just an interesting observation that
it's true.
73% of these jobs are government jobs.
It's true.
And then the last part of that is that, you know, there's the quality of a job versus the quantity of the job. If you look today at the people who are working multiple jobs, that is actually at the highest place that it's ever been in United States history.
True.
And second part to that is if you look at foreign-born job applicants who are getting jobs versus U.S. or native-born, the foreign-born are getting a lot more, which tells me that's part of the reason why we're seeing wage deflation, while at the same time we have unions going on strike looking for serious increases because the reality is life is much more expensive today than it used to be.
Yep.
Yeah, I mean, I heard this morning, I didn't double check this number, but that U.S. jobs were actually down year over year. U.S. born folks down year over year.
Yep.
Those
Agree.
that were not born here, I guess coming over too, you would add them in, that they had seen well over 1 million jobs added. Just to sort of put some perspective on that.
Keep voting for Democrats.
The market that seems to be a little back and forth. To your point, you're more in the hard landing camp, not in the soft landing camp. So a little bit worried, it sounds like. So when you do that, you turn to precious metals and miners And we've seen gold at new highs last week. We've seen silver at new highs today. If you look at SLV, for example, right? We don't talk about SLV as much, but gold hit this new high last week, and sure, it's pulled back slightly. It's down 0.4% this week, but really a stellar performance. And you like names like Barrick Gold and Hecla Mining.
I'll be right back.
You still think there's room to run for the group, and these stocks don't necessarily always go with the commodity itself, but just wanted to hear some of your thoughts.
Yeah, thank you so much. So I think this is an important moment for us to be paying attention, right? Because it's kind of, everything's sort of priced to perfection, at least based upon my view, because the reports are coming out, everything leads to, higher highs. So let's keep doing that, right? So here's the reality. I don't believe that inflation's under control, and I think that if that entrenches in 25, it's not going to be a really positive moment for most things that are going to be more interest rate sensitive or inflation sensitive. And then the other part is the unemployment, I think, is becoming a little bit unhinged here. So the Fed is going to be, the big component on what happens. I think that they're going to ultimately cut. And so I think that it's going to, produce a nice environment for stocks in general. One of the places, though, that we're going to see opportunities is in the miners. And so, yeah, when we get gold at $2,700, that tells me that inflation is still present with us, because it takes $2,700 or more US dollars to buy an ounce of gold than it did the last time that we checked in on it. And so that's part of the reason why gold has actually been one of the best investments that you could have made since COVID actually began. And so it's as much of a run as we've seen everywhere else. Gold has actually performed exceptionally well. But to your point, silver is ultimately, in my opinion, going to lead the way, and we're still looking at about, 40% to go in order to get up to the all-time high of 50. So silver is still a great opportunity. To get to the picks, though, Barrick Gold, they're the biggest, best value company out there, in my opinion. These guys have been doing this for a very long time. They're operating at like 33% margin right now. And so when you're operating with good cash flows and gold keeps going up, that means your cash flow is going to continue to stay positive. So I think that they've got room to grow either way. Hecla Mining is a silver player, a North American silver player. So, the big question that's going to be ahead of us here is what happens in 31 days on November 5th when everyone goes to the polls. Here's what I think that we can know for sure. Not necessarily the outcome, but we're going to know for sure that I don't think either side is going to capitulate that election, that we're not going to get a winner that day. So if that happens, what direction is this thing going to go? I think there's a high probability that we're going to be doing more here in the United States and in North America. So I think Hecla Mine is actually positioned really well, because they've been around since the 1800s. They got a great dividend, 38% margins for operation. I think that they are positioned so well right now, and not only is there an opportunity to grow, this is an organization that has an opportunity to really lead as the trend may come back to mining more so here in North America as opposed to just everywhere else, and valuing some of these companies here at home.
Yeah, I mean, when we think about gold, I can't even go back to the pandemic, but we certainly remember when it was around 1,500, and now we're talking 2,700. So it certainly has been a great move. I mean, just in 1 year alone, we saw some really nice gains to the tune of 45%. So it certainly has been a winner, but you think this is somewhat of a safe haven. What about some of the other sectors that people love to watch, or they consider those to be more safe or defensive?
Yeah, well, so oil has been doing terrible if you track it on a month-over-month basis here as of recent. Obviously, it's turning around right now because we've got these engagements. So I think that there's a great opportunity right now in oil. I'm very much bullish on U.S.-based oil, and I think that we've got organizations that are producing something are going to do really well. Guess what? Technology is going to continue to lead and innovate here too. But what I'm really looking for in the tech space is that mass adoption. Who's going to make my life easier because of AI? Not just do cool tricks and kind of impress me in putting something together, but who's going to make my life and function of life easier? I think whoever answers those questions, it could be Apple, could be Microsoft, could be some of the others here, but the point is that they're likely going to really lead as well, as we are, the first movers are really going to get this figured out. But I just want to cautious people on maybe some places to just be a little bit, careful of, and that is, I see NVIDIA as one of the fastest growing companies that has really ever been, no question. It is a part of the reason why the market's up so significantly. It got there so fast, though, its market cap is so large. I wonder if it's going to be able to keep it in comparison to some of the other chip makers that are coming up. We haven't really had the conversation of what's the best chip, which would be the combination of power, efficiency, upgrading abilities, etc. And what we're doing right now is we're just saying, hey, who can do it the fastest, who can get the most? And these are great chips, but we might be overbuilding them a little bit.
All right, so we'll have to watch that. A cautionary tone on NVIDIA, and looking to some names like Barrick Gold and Hecla Mining. Thank you, David Straszewski, CEO, Sound Planning Group. Thank you. Coming up next, let's dive deeper into the jobs report. We'll get one more jobs report before the next Fed meeting in November. What should we watch for on that report? Our panel is ready.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. Time for the jobs report details, what to watch for in the next jobs report. We had a lot to digest this morning, so the investor, the economy, the Fed, and the next jobs report for November. Our panel is ready. Stephen Rasciuto is with us, U.S. Chief Economist at Mizuho USA. Noah Yosef's with us, Chief Economist, Head of Research, American Staffing Association. Noah, what stood out to you today?
Yeah, so Nicole, this jobs report was, as the title suggests, a blowout. It shows that the labor market remains on solid ground with increased opportunities for both employers as well as reduced separations amongst employees. However, it is important to remember that one report does not constitute a trend. And so what this report really shows is that the labor market is in its Goldilocks stage, where conditions are not super tight and where conditions are not inflationary. However, further readings to the downside could constitute long-term scarring within the labor market, and therefore it is going to be important for the Federal Reserve to keep the labor market within that Goldilocks range, and this report definitely suggests that it has room to run in terms of keeping the labor market healthy.
Yeah, understood. It certainly surprised folks this round, being stronger than expected. The 3-month average, though, a little more tame at 186,000. Stephen Prosciutto, what did you make of it? And what are you watching for next November 1st when we get the October report?
Yeah, well, I think the payroll numbers are telling you what the claims data and the continuing claims data have been telling you for quite some time, that people have been misreading developing weakness in the labor market. There is no developing weakness in the labor market. We have an economy that's running effectively at better than full employment. And it's already at a point where wages are going up. I've noticed a commentary developing over it, and that wages really aren't a problem. Wages are a problem. They're running at 4%. And hourly earnings running at 4% when I have the contract negotiations going on in several key industries telling me there is a tight labor market that's going on out there. And I think the key to watch, though, with regard to the Federal Reserve is the unemployment rate. Okay, they're going to react and overreact to the unemployment rate. This Federal Reserve feels that wages do not drive inflation. I disagree 100%. And they feel that global deflationary pressures will bail them out if they keep the labor market too tight for too long, and they wind up with a little bit of inflation. It'll be contained. I think they're running a risk at losing their credibility and running a risk at going forward. But I do think that the unemployment rate is what they will be looking at more importantly as they sit down with their next FOMC meeting post the election.
Yeah, and so that, to your point, post the election, we'll have one more report on Friday, November 1st for them to digest. But Stephen Prosciutto, today Joe Brusalis and I were talking, and we were noting the full employment, what you're saying here, coupled with the wages that have been higher, but the hiring pays less turnover. I mean, it just even though there's jolts that showing more openings, maybe the pace is slowing down. Maybe it's getting a little harder to get a job. Savings rate is going up. What do you think about that? Is it harder to get a job right now, Stephen?
Well, the reality is you've got an economy that's running above potential. And when an economy runs above potential and you've squeezed the labor market the way they have, created a tight labor market environment, yes, it's going to be harder to find the workers that match the skills. Yes, it's going to be a little bit harder to find the employment. It's also going to be a little harder from a perspective that the equity market has been so robust and corporations are trying to make sure that they can validate their share price where they are by running the earnings numbers on the hotter side as well. So seeing some slowdown in the pace of hiring at this stage in a business cycle is not unexpected whatsoever. It's a traditional cyclical response in this environment, and I think it's very consistent with an economy that's running hot.
Yeah, and look, a lot of that comes from shelter. I mean, I was reading an article today about the high price of housing, and even though, look, rates are still high, they're not coming down. That was something, Noah, you noted about that within the inflationary prints, it's often the shelter costs that grab your attention. You said that the Fed can afford to continue to cut, but too much would really question the credibility. I mean, Stephen Prosciutto is making the point. What is the Fed doing? If they do too much, it could be problematic.
Absolutely, Nicole. So it's important to remember that the balance of risks is still tilted towards the labor market. And so thereby overestimating the strength of the labor market is in fact the most poignant risk to its long-term health. By overlooking specific inequalities in non-farm payrolls growth among specific sectors, or even placing too much weight on job creation versus actually hiring for those roles, makes the Fed risk complacency to slow walking rate cuts and reversing some of the gains that we saw earlier this month. However, this report is very strong, and so it does strengthen their base case for reducing interest rates by 25 basis points in November and December.
Yeah, and the key is that those wages, the hours worked, the wages, the productivity, I think that's going to be, based on a lot of what we're talking about here, is something to watch, right? To balance it all out. Thank you both so much. Stephen Prosciutto, Noah Yosef, thank you both very much. Good luck there at jobs and the economy. Glad you're with us here on the watch list. I'm Nicole Petalides. Keep it right here. Market on Close with Diane King Hall is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead.
Oh boy. Oh, she got halted.
Regaining some momentum. You're looking at the S&P 500 better by a little more than 0.5%. NASDAQ 100 rallying 177, up nearly 1% there. Blue chips gaining about 0.5%, so nearly matching the advance we're seeing in the broadest benchmark of the U.S. stocks. S&P 500 Dow better by 230 points. Small caps holding on to a gain, a solid gain. They are leading the pack, up more than 1.25%. Russell up by 28 points. Let's take a look at some of the other asset classes off the back of that monster jobs report that we've been following all session long.
Monster.
Grow by 254,000.
That wasn't Monster.
The dollar holding on to an advance, rising 0.5% there. Gold under some pressure, which makes sense in the context of what we've seen all week.
They think it was Monster. It wasn't Monster. It was a average. Government jobs.
Now by more than 2% above $62,000. Let's kick things off with a check on the overall broader market reassessment with Kevin Haynes, senior equities contributor here on the Schwab Network. Kevin, all right, we tend to book in these things. We started the session a certain way. We had a chat at middle of the day, but now as we're winding down, this has just been a week full of different moves. You saw downbeat sentiment earlier in this week, and it was like everything was kicking forward to today, but there are some other big developments that occurred this week. What stood out to you the most this week?
Yeah.
Well, I think the overall ability of the market to stay strong despite higher yields, higher dollar, higher crude oil, all things that would be considered worrisome in some markets don't seem to worry this market, because Jerome Powell told us to worry about the labor market, not about inflation, and it turns out the labor market looks pretty good. We went through a gauntlet of earnings releases this week, 4 in a row. JOLTS, better than expected, stronger labor market. ADP, better than expected, stronger labor market. Jobless claims, solid number, 225,000. And then we get this big number today. The only thing you can take away from this is you're worried about the wages and the inflation aspect of this number, but you're still looking at 7 sectors in the S&P 500 higher, 4 lower on the day. So it's still relatively a mixed market, but it's predictable, right? What's on the downside? Utilities, real estate, 2 things that would benefit from lower interest rates, not higher. And then you've got a materials, a small decline in materials. Besides that, the leadership of this group, right? Financials, information services, those information technology, those things leading this market higher screams of a healthy economy. And at the end of the day, despite interest rates that are on the verge of calling them a spike, they're sharply higher. This market still feels good about itself and is going to finish the week pretty solid here, Diane.
So do you think the market seems to be priced for perfection based on what expectations are?
Well, the valuations are not cheap, that's for sure. So there's always that risk there. Once you get the S&P 500 up around 22 or higher PE ratio, things are fully priced. So what can change that? Earnings season. The market's going to be set a big high for earnings season starting next Thursday with Delta Airlines, and then we get right into the banks on Friday. Yeah, that's going to be interesting. Remember, the banks have already warned that trading revenues are going to be lower. Net interest income will be lower. So is the bar set high for the overall market while being low for financials? Possibly, right? You know the airlines are going to do well, right? They've had, a month ago, CPI data had airfares up 3.9% and jet fuel down 10.5%. That's the golden relationship for airlines. So you know they're going to have a good quarter. So there's a lot of good things. It looks like this fourth quarter is going to set up to be a good one, Diane.
And do you think that we're going to turn some attention back to inflation next week when we get some more economic data on that front?
Yeah, you know, there's the big question, right? That's what the Fed speakers are going to have to start addressing when we hear them talk next week. Remember, we get Fed minutes next week as well. So I think that's where things get interesting, right? That's the dialogue that's going to start over the weekend. We've been told that we're okay on inflation and worried about the labor market. Well, this number kind of tells us the exact opposite, Diane. The labor market's pretty strong. 4.1, almost 4%. Strong jobs, but higher wages. Does that reignite or cause us to worry about inflation? Stay tuned, Diane.
All right, stay tuned. Indeed, Kevin Hayes, co-host of Fast Market, right? All right, we've got a lot of stuff to chew on next week. Thanks for the wrap-up of the week and the look ahead. All right, let's check some stocks on the move. For that, I'm joined by Jenny Horn, markets correspondent here on the Schwab Network. It's not all systems go for every stock. Rivian shares under pressure today. Some challenges that continuing to plague the company. What's going on here, Jenny?
I know, Diane, it's like the week that it was for these EV names. We started off strong with the Chinese EV players, and we had some volatility when it came to Tesla, and unfortunately for Rivian, ending on a bit of a sour note here as the company did
Rivian again.
their production forecast Friday and missed its third quarter delivery expectations due to a part shortage, and slowing growth in its EV demand, it said, which sent shares, of course, down substantially. We've actually recovered quite well off of the session lows today, but obviously not the way you want to close out the week, especially for Rivian, which is trading at just $10 a share now, which what a brutal move to the downside this has been this year. I mean, again, well off of lows here, but it's still a name that's down at this point 56% so far this year, off of highs by 58%, off of lows by 26% though. So a bit of a mixed picture there, but the company did say now they expect their full year production to be between around 47,000 and 49,000 vehicles, well below the previous guidance of 57,000 vehicles. The forecast cut does mean the company now expects to make fewer vehicles than it did last year. Slowing growth in the EVs has affected the entire industry, of course, as investors and traders sort of grapple what growth looks like now in this developing space. And I do think that the cut to production, as far as its guidance and Rivian is concerned, it's substantial to raise a lot of questions about how it looks going forward. Because right now, we are trying to find the ability for it to turn a profit. That looks relatively far away. We're also trying to reduce the costs that are hindering it as far as each vehicle made. It spends so much money. They have to lower the production costs while also finding this healthy balance of still being able to obviously turn a profit. So I think the story for this company is, I mean, it could be a potential takeover target we were talking about earlier today. Ooh. It could potentially still see its newer iteration of its vehicles, its mass-marketed vehicles.
Even after China put all that money in it?
That's a long ways away. So in the short term, markets are impatient. This is not the story you want.
Not China, but Volkswagen.
It's down 56% again on the year.
Now, on the flip side, let's take a look at a stock that is having a banner day. Meta hitting a new all-time high today, even higher than I saw earlier in the session. What's going on here?
It's amazing. I mean, Meta is like the poster child of resiliency here. I know NVIDIA is the name of the Mag 7 we talk about the most when it comes to outperformance, but about time we looked at Meta actually, which was actually our second best performer in the S&P 500 last year of the Mag 7 names, and now it's up 68% this year, up another 4.6% this week, and just at its all-time highs, like you did mention. And so much of this is really a result of the enthusiasm tied to AI. Mark Zuckerberg is now really touting the ways in which that AI can now power video. We did see some interesting headlines actually regarding the fact that Meta has launched its latest innovation into generative AI with the release of MovieGen, which is this advanced tool for creating high-quality videos, images, and audios through simple text prompts. So building on what's already been established, Meta did say that it promises to revolutionize content creation by offering capabilities in video generation, editing, and audio. They did say this continues their trend of pushing the boundaries as far as AI technologies are concerned. But I think that according to Meta, this has been right now a story where they're already able to test so much of their AI data in real time with consumers. They've already said that this has been very much in the beta stage. So I think that's also interesting when you talk about AI capabilities. Meta's already doing it. I mean, Instagram already is utilizing various AI tools. You can see if you're on the platform, that's the most platform that I'm familiar with of all of Meta's. But I think that real-time rollout of AI is huge. We also did see Argus raise its price target today to $660 from $600. Just another analyst coming in, being even more optimistic in this name, trading at just below $594 a share, though. So a story of success for Meta. I love to see it, and I have to imagine the huge reason, again, is because we're already utilizing a lot of its AI. It's not one of those far-out stories that we talk about where we have to wait years to see that benefit, Diane.
true, and I mean, it's caught me off guard how high this has run up, especially when you go back to its year of efficiency for Meta. I mean, like the stock is up year to date, up more than 70%. When you look at it on a year-over-year basis, it's up almost 100%. You think back to the challenges that it had in 2022 through 2023 and embarking on that year of efficiency. What else stands out to you in terms of any other analyst commentary that you're noticing?
So I've been really liking the way in which like advertisements, I feel like we talk a lot about like the AI, the universe, the metaverse is also one where I feel like we tend to criticize that element of their business that hasn't exactly been able to turn a profit yet. But I actually think the advertising dollars that we've been tracking with some of these Mag 7 names are so interesting because, like, for example, to me, the ad money makes so much sense when you see it evolving into Instagram, WhatsApp, and Facebook, all of these various platforms, because they're utilizing right now their data so well. I know that that's controversial because many say like these companies shouldn't be able to obtain our data, but I actually like these targeted ads. And as far as Meta's concerned, I feel like this is where you're starting to see the evolution of ads, where they're catered to you as a consumer and they're continuing to find your interest. I like ads that are targeted to me. There's no better platform that does that, frankly, than Meta. I know that many are annoyed with the amount of advertisements right now, but I don't see that necessarily going away. I mean, we look at the way this company has been able to hold on to its longevity as the largest social media company. I know TikTok is a looming threat, but it still is king. Talk about Snap, think about MySpace, Vine, all of these names. There's a reason that Meta has been able to stick around and be the dominant force for so long, and I think that there's pretty good reason behind that. So I love the story of Meta and Mark Zuckerberg. I know that that's controversial, but I continue to root for their success here day in.
I mean, I don't think it's controversial. I mean, there's a reason that now he landed as the, as number 2 in terms of net worth, and everybody uses these different platforms when you're talking about the OG Facebook, going on to Instagram. So I think it makes sense what you're saying and what we're seeing, and again, going back to both the year of efficiency and including growth plans that Meta has. They talked about, I remember them talking about earnings calls last year about trying to figure out how to monetize Reels because there was more demand for Reels, and they've certainly figured out how to monetize the advertising space and utilizing the AI tools that they have, and including also getting ready for the holidays with the new Ray-Ban glasses that they have increasing in the virtual reality space. I mean, I'm with you. I can talk Meta. I don't own Meta. I have before. I wish I did still.
Me too. Me too.
Right? But, we could talk ad nauseum about this. But we'll put a pin in our conversation. Great insight on Meta and Rivian as well. Jenny Horn, markets correspondent here on the Schwab Network. Let's wind
Big
back
day
up
for
to the big
Meta.
picture. For that, I'm joined by Chris Recker, Chief Investment Officer, AZA Capital Management. Thank you so much for joining us this afternoon. Let's talk first about, Chris, what your overall assessment is of the jobs report today. There was no call that I saw that nailed the numbers today. The closest call I saw was, or heard about, was Jeffries calling for 220K jobs added. What was your reaction?
Well, I mean, it really ties into what the Fed is doing. It makes you question why they're on a cutting spree, given this strength in these numbers. But when you look internally at it, whether it's the size of government employment increases, the composition of the labor force, hours worked, what we would say is, more people moved from part-time to full-time, but hours went down for the overall labor force. People under 65 are finding less jobs. People over 65 are staying in their jobs longer. So and then when you look at non-farm payroll growth, if you believe that these are reliable numbers, on a 6-month and a year-over-year basis, we're seeing a deceleration in job growth. So there are fewer opportunities out there. It's near stall speed, but it's not quite recessionary yet. So you can take what you want from it, but we're more focused on why are central bankers around the world pushing for rate cuts in the face of data like this.
I know there are sometimes questions about that number, the NFP print, but a lot of times, like the household survey, doesn't get questioned as much, and that even improved at 4.1%. So it's hard to find much wrong with this report. I know the previous two prints did show some weakness. So it's not to say there isn't any more weakness to come, but you seem very downbeat. What is the concern going forward?
Well, I think the real, what we have, wages were strong, employment growth seemingly strong. You have central banks in the United States, Federal Reserve Board governors talking for aggressive rate, basically arguing for aggressive rate cuts. The Bank of England is looking at rate cuts. The ECB, the Bank of Japan has turned tail on its rate increase cycle. You can go to New Zealand, Sweden. You can go around the world and look at these central banks that are cutting their funds rates, and you have to ask, why are they doing that in the face of really strong U.S. economic data, and why is the Fed cutting rates, especially as when you look at inflation measures, which are seemingly benign, but underneath the hood, you have this really strong wage growth. The ISM data this week with prices paid were all very inflationary, and they have been for the last few months. So what is I guess our concern with data like this is where are the problems?
And then let me ask you, it sounds like your view is of the Fed's cut that it did, of the 50 basis point cut, was too much, and in the context of this jobs report that we have right now. Hindsight is 2020. If your call is correct, where does the Fed go next?
Oh gosh, I'm so tired.
Well, I think the market's, priced 25 basis point cuts out for at least the next few meetings. I mean, we're not going to argue
Get some
about
more water.
bankers when they're determined they're going to cut rates. They want to lower the funds, cost of funds for the street. They want to make things. They're never popular when they're raising rates or keeping rates higher. So I think that the trend is down. I think we do see cracks in the economy, but not enough to warrant a 50 basis point. I think we're questioning why 50 basis points, and then why not? Why wouldn't you wait to see more data? Unless you really think there's a recession coming, then I guess the question is, are they telling us that there is something worse on the way, and that the lag effects that are built in are going to be of concern? And when you look at the price of equity markets, they're extremely rich. High yield markets, spreads, credit market spreads, they're all very tight. So when you look at financial conditions around the world, they're extremely easy. There are a few places you will look where it's tighter in certain swap spreads, but outside of that, it's very hard to see a reason for the Fed to be so aggressive in easing.
So we've had others point out about where valuations stand, especially when you look at the PE for the S&P 500. But there are other factors that could be considered with regard to where it is, like the path for growth in general. And growth has been a driver, especially like when you look at the tech sector earlier this year. What is your concern about where valuations are now? Do we really need to pull off a monster earnings season to justify the valuations?
Yeah, absolutely. I mean, I think you have to look at, if you look at GAAP earnings and free cash flow as a percent of GAAP earnings is the lowest it's been since 2009, 2008. And so what that says is that a lot of companies are making huge investments, and are those investments going to pay off? I mean, AI is going to require hundreds of billions of dollars in revenue, and to justify these levels of investment, and they're going to have to deliver the earnings. And the reality is, for an economy, for the S&P 500, over long periods of time, earnings pretty much match nominal growth, as do revenues. And so when you see nominal growth slowing to 4%, and we get to that 4% rate in a number of ways, but one way to think about it is, productivity growth, inflation, and labor force growth. So those are all have been slowing, and they're much lower today than they have been in the last 50 years. And what you see there is the forward P. Some people have noted this is the highest forward P we've seen in the last 60 years during the first Fed rate cut. So all that's saying is, equity markets are disconnected from a recessionary outcome. We're not saying that there's going to be a recession. We're just asking the question, is it worth the risk to take on larger equity allocations in the face of these valuation metrics and the beginning of the Fed rate cutting cycle, where the central bankers seem all around the world seem eager to cut rates without any real underlying data to really justify their aggressiveness.
Okay, all right. Adding some questions to the equation about the potential for mitigating risk in the face of these PE levels. Chris Recker, Chief Investment Officer, AZA Capital Management. Thank you for joining us this Friday.
Thank you for having me.
Coming up, you got it, you too. Coming up, we'll dive into the restaurant sector with Dan Ahrens from Advisor Shares. Find out why fast casual is in favor right now compared to fast food. Market on Close will be back after this break.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Market on Close. I'm Diane King Hall. Oliver Rennick will be back with you on Monday. Let's dive into the restaurant sector. For that, I want to welcome in Dan Ahrens, Managing Director and Portfolio Manager, Advisor Shares. Dan, thank you so much for joining us this afternoon.
Thanks,
so let's
bye,
talk
Rip.
about the sector overall first, before we get into, I know you all have an ETF wrapper. So you prefer fast casual over fast food.
Shit.
Tell us why you like the names in that space better.
Certainly. Well, the overall restaurant space has been strong. We just saw some employment numbers out this morning that restaurants and bars added more than 69,000 jobs in the United States last month. But you hit on a topic that we talk about a lot. It's important to pick the right companies and the right segments. Some of the biggest headwinds right now to restaurants, even though they're outperforming the overall market in many time frames, are employment issues and inflationary issues. So we underweight or avoid a number of the fast food names because it's really expensive for what you get in this inflationary period, and they do face employment headwinds. But certain fast casual restaurants, and here I'm talking about Wingstop, Cava, Sweet Green, even El Pollo Loco is a good one. And they're threading that needle between inflationary prices and perceived value to the customer. And those are some of our favorites. We also like some names in the what's called casual segment. Casual means a sit-down restaurant, but often on the lower price points for a sit-down restaurant. And there's restaurants like Chili's, which is Brinker International, and Texas Roadhouse that are really hitting the right spot. They are high quality food, perceptually, compared to fast food. Chili's advertises a $10.99 3-item special. Well, that gets people in. It seems like it's more cheaper than fast food, but you're getting more value. And then those companies can sell alcohol products as well, and that's a high margin sell for those people. So we like some of the right casual restaurants and some of the best fast casual restaurants right now.
It's interesting that you point out the price point at some of these places, especially like the fast casual compared to, say, the fast food or even the sit-down restaurants, because we've had some of that conversation throughout this year because the prices were increasing so much at these fast food restaurants that it was kind of becoming comparable to other places that you typically associate with being with you shelling out a little bit more money. And so the cost benefit analysis seemed to favor either the fast casual, to your point, or even the sit down restaurant. And you know, I'll admit what caught me off guard, I hadn't been following Kava as closely or Sweet Green's share price throughout this year, and it's, I mean, both having a banner year, because I was like, oh, let me see where they are, especially even I was like, why isn't Chipotle on his list? Because, you know, Chipotle is so often on people's lists, but I can see why. When you think about the employment picture, though, although there was growth in leisure and hospitality, are there any concerns about any, you know, challenges within the sector for any of these kind of companies, whether it's the fast casual or the sit-down restaurant?
Well, there's always challenges there, and I mentioned that's one of the biggest headwinds right now that companies need to overcome. So the companies that have happy employees and have good technology are the best winners in this space. Because companies like Sweetgreen and Kava and even Wingstop, they do a lot of carry-out or takeaway business. They also serve a lot of customers through all of the delivery services. So they sure better have good technology and smooth operations.
CAVA.
That helps overcome a little bit, employment challenges. Maybe they can do it all with one less employee, 2 less employees, and have good employee retention as well. So again, the price point's very important.
There's an investigation into sanitation grades. Got a C on Kava.
Slightly more expensive than a typical fast food.
That don't sound good.
And offer
Sir?
quality in almost everybody's minds.
And let's talk about your EATS ETF, that wrapper there, EATZ to be precise. You've been hitting high after high this week in terms of the share price. What are the biggest holdings within that wrapper? And what does it tell us about the state of the fast casual restaurant space?
Sure. So, yeah, we like our EATS ETF quite a bit. I wish I could have got the S when I was getting ticker reservations, but we had to get a Z, but it's still kind of cute.
I don't get that joke.
Fund, and that simply means it's not following an index. And because it's actively managed, we're not trading it constantly or anything like that, but I can choose which companies we want to have as the top weightings. The number one holding right now is Texas Roadhouse that I already mentioned, and it's a company that's really hitting on all cylinders right now. It's doing very well. We also have one that a lot of people might not be familiar with, Yum China. So the Chinese market for fast food is quite a bit different than the U.S. market for fast food, and Yum China is looking very well right now. It's KFC and Taco Bell and Pizza Hut in China. But we also have Wingstop that we already mentioned. We have Eat, which is Brinker International. Their primary brand is Chili's in Brinker International. And then we have El Pollo Loco that I mentioned. So it is a mix of fast casual, the best performers, and a couple of the casual restaurants that I mentioned, and then Yum China thrown in there as well.
Mister and Coin making new highs. You were on them yesterday.
We have had those in the top 5 holdings at various times. They're just slightly outside there right now.
All right, so yeah, it's up 1.5% right now, year to date, tracking close to the S&P 500. Dan, we'll have to put a pin in our conversation and book some reservations somewhere. Maybe the fast casual places we can just turn up. Dan Ahrens, Managing Director and Portfolio Manager, Advisor Shares. Thank you so much. Have a great weekend, Dan.
You too, Dana.
Got it. Coming up, Options Corner. Kevin Green will join us with the level to watch into the close. We'll be back after this break.
Trading at Schwab is powered by Overtrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
This election season, stay out of the muck and the mudslinging with Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week it's going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our
670?
unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable
Well, there goes that
themes,
loss.
25 stocks in just a few clicks.
Welcome back to
170 to 670.
Options Corner. Kevin Green, Senior Markets Correspondent here on the Schwab Network, joining us with all the levels to watch heading into the close. All right, Kevin, I know
I scalped it 2 or 3 times in that period, but God
We've
darn.
broken a level within the last 30 minutes. So what are you watching right now?
Yeah, I mean, we are pretty much
$6
gonna be testing the
times
highs of the
10.
day here, Diane, and this is actually a remarkable turnaround that we've seen. We actually talked about it on the Morning Trade Live panel here.
890, 920.
We did exactly just that. We came down, it was aggressive selling, and then we actually had a little bit of a double bottom. You can see
Damn
with
it.
the 2 circles there, and then we've been trying to just pretty much inch all the way higher here. Now this test that we are going to see around 57.45 is already kind of a melt up from that 57.30 dealer gamma level that we've seen, or that positive resistance level. Now these levels right now is sitting at around $40 to $45 billion worth of gamma exposure for dealers. But if you can break above 57.50, which would be a tall order, then we would continue to see this melt up to the upside. But once again, this is just a remarkable day, to say the least here. The balance area, if we were to have
You got that
reversal,
right.
would be
Remarkable.
57.20, so that would be where dealers are net neutral on the day, meaning that they don't have any type of bias to the upside or downside. But we are, for the most part, actually squeezing and have been squeezing here for, let's say, the last 30 minutes or so.
Within the last 30 minutes, we did start to notice patterns changing this afternoon. Where's the open interest right now in the S&P 500?
Yeah, so we have a little bit of a bigger perspective when it comes to open interest, just because it just allows us to kind of mirror or map out some of the technical levels with some of these dealer levels that we talk about on a day-by-day basis. So obviously the levels that we kind of talk about now is 58,800 is going to be your positive resistance area for open interest at the moment. 5750 is going to be your immediate area of resistance, which once again we're going to be actually testing that for the most part right now. And then the 5680 going to be your negative gamma level. I also highlighted here the 5620. That's going to be in blue. That's kind of your sell-off trigger. Like if we came back down and we came through that 5620, you could probably see selling activity actually increase over the near term. But overall, if we're able to kind of keep this uptrend intact, which I have in white, if we can keep that uptrend intact, maybe come down and even test that 5680, but still bounce off of that, that would be positive overall for the market. I mean, this is still a bull market. We're not seeing anything that's completely bearish at this point in time, and it's going to need to really have a catalyst in order to try to turn this around, meaning bad economic data. And coming into next week, we should actually see some favorable data for the market. Let's see if the equity traders are going to feel the same way, and we can continue to move higher and try to press some of these upper levels.
It looks like it keeps pushing right now as I'm watching, and I'm watching on the boards here. Was there any unusual options flows that you noticed today?
A little bit, but the thing about the Friday expirations is there's a lot of repositioning taking place in order to get ready for the weekend. So I usually like to look at the flows, but at the end of the day, kind of look what the new levels are going to be on Monday when it comes to open interest to really kind of confirm, because we don't really know exactly how a lot of these dealers are really feeling on an intraday basis for the long term. So I would say overall this was we started off very negative, and now we are seeing really a lot of call buying activity taking place. And in fact, when we started seeing that initial turnaround to the upside after that double bottom, we started seeing a lot of activity going into the 5730s and the 5750 calls. So those were kind of the areas, or the areas that we kind of talked about earlier this morning, that we saw a lot of enthusiasm. But for the longer term, once again, kind of see how this open interest kind of nets out on Monday when we get the updated numbers.
And then it seems to be some cooling in terms of volatility today. What levels are you paying attention to on the VIX?
Yeah, so for volatility, kind of looking at the range that we actually saw spike up in on Tuesday, and we've been ranging between 18.5 and let's say 20 3/4 here. Right now, for now, even though we are melting up, for now, we haven't really broken through the lower area of that range, and that's really what I would like to see, feel confident that the market is now starting to at least consume and understand some of the geopolitical risk that is out there and keep that in the back of their mind, but also kind of removing some of the pressure or the risk that we have when it comes to the labor market fears. Now, once again, mind you, we do have CPI data coming out next week, but the trends for CPI have been very favorable, even though some of the commodities that we are seeing kind of press to the upside because of the geopolitical risk as well as the China risk may be something that has to be on our radar for inflation 2 or 3 months down the road, but that's not an immediate risk. That's probably not going to be something that is going to impact the Fed's decision at the beginning of November. So you'd like to see a break below, kind of fill that gap that we had on Tuesday for volatility, and I think that's going to be another feather in the cap here for the bulls to be able to maintain some strength over the next couple of trading sessions.
And really quickly, KG, what the level you're watching on the S&P 500 as we melt up right now, what is that again now?
Well, so 5750 is going to be your key area of resistance. I mean, we already looked at 5730. That was the positive level that we've been actually ranging or trying to resist for the better part of today, especially about an hour and a half ago. But now since we've broken through that level, we now have kind of a melting up scenario taking place. So that next area of resistance is going to be 5750. That's what is actually highlighted on that open interest chart that we kind of had, the longer term time frame here. This will be a bigger wall of concentration of positioning here, just meaning that the dealers don't want to really be offside, so they might try to sell into some of this strength in order to try to avoid closing above that 5750 level. It's never a given, but these are just another key indicator that we can utilize amongst others, fundamental as well as technical, to try to figure out key areas of resistance or support.
$2 bounce right there.
Market. But once again, we already broke through our range. We're melting up right now. 5750 is going to be that next key area. If you get through 5755, the market could rally even more. We only have about 20 minutes in order to do so, though.
All right. Kevin Green, Senior Markets Correspondent here on the Schwab Network. We'll talk to you again on the panel. Coming up, we'll wrap up an action-packed week in the commodities and markets with Phil Strebel from Blue Line Futures and a developing story on an apparel name that's up more than 60% this year. Market on close. Back after this break.
How's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Market on Close. I'm Diane King Hall here at the New York Stock Exchange in for Oliver Rennig. Let's wrap up the week with Phil Strebel, Chief Market Strategist at Blue Line Futures. We're going to dive into a look at commodities, metals, etc. Phil, it has been a packed week this week. We had the dock worker strike that started the week. We're ending it with, it seems like, at least a temporary kind of agreement there. Rising tensions in the Middle East. Today's jobs reports, all of these impacting a variety of assets, especially when you think about crude oil. What's been your takeaways this week?
Yeah, well, luckily we dodged a dock worker strike because I think that would have been like similar to like a situation like COVID where you see no new inputs coming in as far as commodities. And then what would happen is that we would naturally utilize all the supply that's available in the United States, and then prices in general would rise. That would be an inflationary headwind that we see having an impact on prices and potentially impacting the direction that the Federal Reserve will take as far as cutting interest rates. But yeah, just across the board, that sheer volatility in the market, especially crude oil futures, up about 9% for WTI on the week. That's also going to weigh in where not this next CPI report, but down the road, people are going to also feel it at the pump, and we're going to see it in that data. And, who knows if it does start to take some of these interest rate cuts really off the table. I know we did see a repricing on that next Fed watch tool with about an 80% chance of a 25 basis point interest rate cut.
We did see a repricing on that. And that's something, to go back to your point about crude oil, before this week, crude oil had really been, it had come down a lot. But then you saw these escalating tensions in the Middle East, and then crude oil has continued to push higher all week. Are you concerned that there's going to be some inflationary pressure on the horizon quicker than we expect?
110%. And really what turned it around before was, the backdrop of China and their stimulus measures. China is the number one consumer of copper. They're the number two consumer of
I'm
crude
so wore
oil.
out.
And it looked like they were ready to do whatever it takes to hit their 2024 GDP growth target. They modified monetary policy by lowering rates. They modified and helped improve their property sector by lowering refinance rates. And then their capital markets, you look at their stock market, holy smokes. That was the biggest short-term rally I think I've ever seen. And I've been a commodities broker for about 25 years. When they come out and they encourage stock buybacks like that, you just saw this short covering rally lifting most of the commodities and commodities that are China related. Even soybeans got a huge boost earlier in the week, and we also saw other commodities out there that again China plays some role in all lift up.
So for crude, what's the path that you think crude oil is going to continue to push higher?
So you look at the volatility in that. That average true range, just looking at the screen right now, jumping up to $2.50 a day. So you gotta strap in if you're gonna trade that thing. It did settle right just below the 200-day moving average. And you remember just a week or two ago, they were saying there's plenty of supply out there. China was slowing down, U.S. economy, people were chattering about recessions and things. You look at the labor market, you look at everything out there, definitely things have turned. We need to get above $75, I think, on a closing basis on the November contract in order to make that run back up to 80. But I don't think that the current administration wants to see $80 crude oil, at least anybody even talking about higher prices at the pump or higher crude oil ahead of an election.
No, you're right. They certainly don't want to see that ahead of an election. And crude oil
No, they don't.
Down because there were all these worries about oversupply, especially like when Saudi Arabia was talking about, reducing certain caps. All right, let's switch gears and take a look at metals. We've seen silver continues to rally. It had hit another all-time high. What are you watching when it comes to the levels in silver, or even obviously gold has pulled back some today. That makes sense. But what levels are you watching for both silver and gold?
It was the gold market that reached the all-time highs this week. Now, it took a little bit of a breather because of the fact that some of this data has been a bit supportive. So you're seeing a repricing because you have to think about gold, what's priced in. And I think it was almost a perfect storm. You saw that 200 basis points of interest rate cuts were expected, 100 at the end of this year and 100 in the next year. But you get this hotter data, it brings that down, and gold futures naturally have to come off a bit. Something I was talking with my coworkers about is that the 2-year Treasury yield, as high as it is right now, 3.86%, huge jump up today, about 20 basis points. You saw the last time we were at that level was August 30th. Gold futures were about 25.15. So we might be a little ahead of our skis on here. I'd like to see gold futures hold up. I'd like to see central bank buying and other people come in if we do get any kind of correction in prices. But you got to be a little bit cautious here, especially when you start looking at the correlations between 2-year Treasury yields and the gold market.
Okay, that makes sense. And thank you for the correction on that. Silver, not an all-time high. Gold hit that all-time high this week. Let's take a look at copper futures. They've been on the upswing again. You talked about that massive rally that we saw with the China stock market and off the back of all the stimulus measures. Are the recent gains that we're seeing in copper purely a China story, or is there more to this?
No. With gold near record highs, silver breaking through $33, many traders want to broaden their exposure to the metals complex. And I think that that's a great proxy as the copper market. The fundamentals have greatly improved since testing $4 in early September and remained supportive for this fourth quarter. We've got constrained mining supply. Shanghai and LME inventories have declined. The demand has increased on any kind of pullback, and it is one of the best conductors of electricity. So it does make that green energy transition the main product to be involved with. I think you've got a rate effect. Lower interest rates could spur automotive demand reasonably quickly. You could see an uptick in housing starts as well because of that lower interest rate. And I think your tailwind is that global manufacturing, although it's been weak, we have not yet seen the effects of these stimulus measures, the interest rate cuts in the U.S. and Europe, Chinese stimulus. So we are in the camp that global manufacturing will pick up in 2025, and prices could retest those May highs.
And really quickly, Phil, before we lose you, because I know we're short on time, but I always like to hear your insight. What's your outlook when it comes to crypto, Bitcoin, Ethereum, etc.?
Coiling back and forth, holding the 50-day moving average. We don't want to see it close below 58,500. It is a proxy to the NASDAQ, so with U.S. equities turning back up, this is a friendly environment for the crypto space.
All right, friendly environment for crypto. Phil Strebel, Chief Market Strategist at Blue Line Futures. Thanks, Phil. Have a great weekend.
You too.
All right, thank you. Let's check in on the developing story with Jenny Horn, markets correspondent here on Schwab Network. We've got a look at Abercrombie and Fitch up more than 60% this year. What's the latest around Abercrombie and Fitch?
The latest is good news today, and so closing things out on a positive note on this Friday, because Abercrombie & Fitch has been like our stalwart of strength in the overall retail space, and JP Morgan today raising its price target to 195 from 194 with an overweight rating, but highlighting that their actual Hollister brand is in the early innings of this brand building, with the company already doing an impressive job to lure in this wider demographic really of 18 to 40-year-olds, leading to JP Morgan to add the company to its positive catalyst watch list ahead of its third quarter results due out on November 27th. So a bit of time until we get those earnings, but based on field work and their access to management, the analyst does anticipate an upside to consensus for third quarter as well as fiscal 2024 top line earnings estimates. Did also raise his same-store sales growth for Hollister to about 9% to the upside, above the street's consensus at around 8%. For third quarter, this analyst also did hike their earnings estimate by around $2.40 a share versus the street estimate of around $2.36 a share, based on this 13% revenue growth metric and gross margin of around 10 basis points to the upside. So stock is today moving above, this 200-day moving average. It's been pretty sideways over the last several weeks, and it's been really struggling to recover its momentum following the last earnings report when we saw a pretty substantial gap down. So even though we're off of lows at this point by about, 174%, so not even close. We have pulled back from highs by about 26%, but amazingly so with Abercrombie & Fitch is actually its valuation trading at 13 times its forward earnings. For a company that has been outperforming this substantially, this is astounding to me. I mean, comparatively, the apparel retail space trades at around 24 times, and discretionary trades at around 36 times. So this name is, all things considered, cheap at this valuation.
Yeah, that does sound like a cheap valuation when you put it that way. And I mean, kudos to Fran Horowitz. She did a great job with turning the company around, latest feather in her cap, and landing on Fortune's most powerful women list. So the turnaround at Abercrombie & Fitch has been something to watch, and the stock clearly being rewarded for that. Jenny Horn, markets correspondent here on the Schwab Network. Thank you, Jenny. Coming up, we'll close out this market session, get the big picture from the team at Charles Schwab. Stay with us.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a
My
trader
job.
is to just make money.
Make
History
money.
and a geography degree. How did you find your way into trading?
Trading attracts a lot
Oh,
of the best and brightest
Jed
students.
Phone.
Because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is
Second nature.
a superpower?
She's got all the confidence in the world. I'd like to sit side by side with her and see how she really trades. I really would. I bet you. I've met thousands of traders. I mean, a lot. A lot. But I've never heard one talk like that. Well, I have. One guy said he made 100% for a whole year. I could, and that was a lie. I can't do it. I don't think I've met anybody that can. That was comes second nature to me. Oh, Mr. Skinny Man was a cocky one, but all he did was buy puts on breakouts. And he ended up getting busted for peeping Tom. I don't know whatever happened to him. I haven't seen him. I think I probably blocked him. Then you got the kid that keeps trading AMC. And he's been in that thing for a year, and it hasn't moved. He does videos on it, and people believe him and follow him, and I'm going, what the fuck, man? And we're at 439. This is the worst stock out there right now. And there's and there used to be a big cult on PLTR too for a long time, and it didn't do nothing for 3 years, 2 years, and finally it popped. It'll eventually move. I mean, but it might move one time, and then people will short the shit out of it. AMC. Right now they're all over Tiger, TIGR. It's got a lot of volume today.
There was some question, because when you come out of an inverted market, a yield market like we had before, so the uninversion, right? That's where a lot of the fear is. You got to remember the backdrop, though. Where when you look to prior times in history,
Don't I have Tiger on here?
it's really because we're already in a recession and the Fed is aggressively cutting the front end out of fear, right? Or maybe not fear, but at least trying to get in front of some economic weakness.
This has a lot of volume.
The Fed has now been preaching the story.
Well, not that much.
Buying into it that we're not doing this out of fear of the economy, headed towards a hard landing. We're doing this to kind of get ahead.
I have 1271 today. We hit 1238.
Should have done in July with that first rate. And so I look at that 50 basis point cut in September, not necessarily as a predictive measure that the Fed is.
2 more minutes. I thought this day would go by fast, but it sure in heck
when I think
didn't.
of that in terms of what does that mean for soft landing, hard landing, no landing, you're probably closer to that soft landing camp at this point. But the Fed said they're data dependent. This is one data point. We're going to see what's going to happen over the next couple months. But at this point, the market seems to be digesting that very well.
And then when you think about kind of the scope and widening out that we're seeing, the Russell has been leading, small caps are higher, NASDAQ catching up. What does that tell us?
Well, when I look at the fact that 7 out of the 11 sectors, the GIG sectors, right, are now trading with 80% of their stocks above the 50-day moving average, that shows you that cyclical trade is really, catching life. And it's been something that's been going on for a little bit of time now, but it's gone on in fits and starts, and it continues to really kind of move forward. You're seeing really strong outperformance in industrials and materials. These are sectors that will show you that the cyclical trade is working, and it's not getting to the point yet where we start to worry about inflation. But remember, there is a dual mandate from the Fed, and if employment seems to be going strongly, at least at this point, or at least holding up, we'll get some data next week on the CPI and the PPI to show whether or not we can keep
The 1040s went to 1070. The SPX, unbelievable.
Whether it's the Mideast tensions or kind of the Chinese stimulus plans, that could have an effect on what we see on the inflationary front, which may give some pause to the Fed.
I would never think that would happen this weekend.
Cut at the next meeting is what's being predicted at this point.
Yeah, that's what it seems like the market is predicting at this point as well. Joe, always great to hear you.
Alrighty, well, I'm going to get out of here. I've had enough of this today. I had a real good day today. This last trade, I sure wish I'd have stuck in it, but I just got all pooped out. It ran up big. Yep. $170 all the way up to $1,100. That'd been $10,000. Or I was even cheaper than that, but I ain't going to talk about it. I was in it at what? 125? But all in all, it's been a real good day, real good week. One of my better weeks. So I'm going to get on out of here. Wish everybody a great weekend. I'll see if I can find a video to do this weekend. Mike, thank you. Thank everybody that's in the room. Yay. Y'all debating about politics when you should have been debating stocks. So everybody be good.